stars are doing well. Mike mentioned this, Amazon now crossing $3 trillion in market cap. So Amazon, the second biggest gainer in terms of points added. Microsoft still up there, though, after seeing huge hundreds of billions of dollars added in its market cap. In fact, the amount Microsoft added is bigger than every single European company except for ASML, just to give you a scale to reference, and the fact that Europe maybe just has smaller companies. In general, Alphabet, Meta, Tesla, so a lot of the MAGs have been doing well. Boeing is up there too. I don't see it in the gainers, however, it is up there after a double upgrade from BNP Paribas. Chips are under pressure this morning, or reports that one of the Chinese chip makers is opening a second chip making facility. So you see Broadcom, Micron, all of them down this morning. Apple falls again to 0.6%. In terms of how the sectors are looking, energy is also down as the price of oil plummets this morning over hopes that peace talks will resume. Mike was just mentioning that, the back and forth, so that's your worst performing sector. Utilities, real estate, so some of the bond proxies are lower. Communication services, again, that's higher thanks to those hyperscalers doing well. Consumer discretion and financials also moving higher this morning. Coming up, more earnings to get through. Palantir, the first major tech firm reporting this week, and has plenty to prove with shares down 30% this year. This is Bloomberg Open Interest.
Tom Lee's here, head of research at Fundstrat, chief investment officer of Fundstrat Capital, as well as a CNBC contributor. It's August 3rd. I'm glad to have you here. I'm glad to have you here at 6 a.m. Just to get your comments. I thought in July, last time you were on, you shook me because you said that we could have, before ending the year much higher, that we could have
other nations in the
region. He said I could have gotten to a 6 handle on the S&P based on the numbers you were talking about.
Yeah, something that'll feel like a bear market, 10% kind of drawdown.
That's what you thought. It was not a good month for July, and you said that it was, even for what you were expecting, it was not as positive as you were thinking. But the averages didn't do that. There was a day where the Dow went down 1250. Who knows what's going on? That was an AI unwind for that hedge fund to explain it. Doesn't matter what caused it. It did get down, but 7,200, nowhere near 6.
No.
Or maybe 73. How low did I'm just off the top of my head. Is that enough now?
Well, I think August is a month to recover how June and July have been sort of flat months, but earnings estimates have gone up a lot. So the stock market's kind of a coiled spring, and then we had a huge deleveraging, as you're talking about, because of the AI unwind in Korea's policymakers panicking. So I think the markets could actually rebound strongly this month. Like maybe we get to 7,800.
This month to 7,800.
Yeah, for the S&P.
Is that forecast for the 10% drawdown still intact?
Yes.
It is?
Yeah, so...
Can't you take that off the table? Will you do it for me so it doesn't have to? No. Okay. So we get to 7,800, maybe a 10% drawdown, and then close the year above 8,000.
Yes. Yeah, I think because as we start to look at 2027, there's a lot of the clouds that are heading this year kind of lift. The SpaceX unlock will be behind us, and the market testing of the new Fed will be behind us. So I think, and then of course there's already been a leverage unwind. So I think 2027 could be one of the best years for the stock market.
And you think part of the positive sentiment this month is going to be cooler inflation data? Why?
Yes.
Why? Oil's back up.
Yeah, oil's up, and we still have the tariffs working through. So those are hitting the CPI numbers, but the real driver of inflation historically has been housing and wages. And housing has really disinflated. We've had 3 months now of declining home prices. So you're taking out one of the biggest weights for inflation. And then I think wage inflation is really muted. We'll find out this Friday.
Hey, Tom, I just want to ask you what you think of the Leopold Aschenbrenner situation and the idea that he was highly leveraged 4 times, had to unwind this stuff. How much of that played into what you were just talking about with South Korea and the panic that happened there? How much of that was because he was selling that portfolio at the same time?
I think it was a big factor because, as you know, Korea is basically two companies, Samsung and Hynix, so it's memory and semis. he of course had a very large following. So not only was his leverage on his $45 billion, let's say it was leveraged 150 billion, but there was a lot of money piggybacking on his trade. So I think in some ways, the unwind, and even last week, was due to a lot of funds being aware that he might have been in trouble.
My Bitchute goal just kicked in. Sir, that is always an immediate yes for me. My husband has been in
shoes. Danny, I didn't realize shoe width can move a stock, but apparently it can. We are seeing shares though to the upside, up about 0.4%, excuse me. Nora, thank you very much for that, Nora Lindsay. We'll be back with some of our other movers throughout the rest of the next hour. Some more big tech earnings this week will determine momentum in the AI trade. With expectations running high, even strong results may not be enough to impress traders unless companies can prove AI spending is translating into growth. Palantir on deck after the bell with shares down more than 40% from a peak in November. And then tomorrow we get SpaceX. Bloomberg Intelligence head of global tech coverage, Mandeep Singh, joins us now. It's not just the earnings from SpaceX, but then shortly thereafter we have a lockup too. What will matter more for the stock, the actual results themselves, or the fact that more supply of SpaceX is going to be coming onto the market?
I mean, the results matter because of what the hyperscalers did last week, and it was pretty strong set of results from Amazon and Microsoft. So from that perspective, if SpaceX can come out and say, we benefited from compute deals that they signed with Anthropic and Google, and they are expanding more supply of compute over the second half, that will be positive. But there's no doubt, if the float is getting doubled, then certainly will put pressure on the stock.
Well, the lockup is going to be probably getting as much attention as the report. Earnings they don't have, but they do have a lot of people who are lined up to sell shares. How's that going to affect them going forward?
I mean, I think this is a stock that is clearly trading based on, what they're going to do in the out years. And if SpaceX is able to, let's say, add 4 gigawatt of compute capacity this year, another, 5 to 6 gigawatt of compute capacity, and the equation right now is for every gigawatt, you can generate up to $15 to $20 billion in revenue, then suddenly, they could end up being a $100 billion revenue run rate company over the course of the next 3 to 4 years. And that's huge in the context of what was priced at the time of IPO. But clearly right now we're seeing hyperscalers do very well. And hyperscalers have the balance sheet to finance, even if interest rates go up, with all the yields going up, hyperscalers would be in a great spot. We can't say the same about SpaceX. I mean, yes, there is Elon Musk, but they need to raise a lot of capital to add these 4 to 5 gigawatts of capacity.
I was going to say, just on that, is SpaceX a catalyst for wider tech movement or not really? Because they are in this unique position where truly all of their future earnings or valuation is tied to timelines that are very far out.
Yes, and also I think because it's an Elon Musk company, if let's say valuation continues to go down, then the pressure will mount when are Tesla and SpaceX going to merge, and that could very well be a catalyst because of how much it has come down since the IPO.
Mandy, why is the sell side willing to die on this hill of SpaceX? Everyone wants to defend.
Hello, my name is DrPaulCottrell. We are live streaming on YouTube and on Rumble. We're also live streaming on my website, the-studio-reykjavik.com. Thank you for joining. I greatly appreciate it if you share the links and ask your social media to follow me. All these videos are free. I'm going to tell you how to improve your health, but also how to navigate the financial markets. Now, the big news last night was the intervention of the Central Bank of Japan, the BOJ, and the coordination with the Federal Reserve. What looks like what happened was that there were treasuries, the Japanese sold treasuries to strengthen the yen. And I think to soak up those treasuries, the Federal Reserve purchased. Now, what also seems to have happened is there seems to be a weakening of the dollar relative to the euro. So it looks like the U.S. intervened with the euro also. But I'm not completely positive about that. But there's definitely a intervention that took took place last night. Now, the yen was trading at about 163 last week. Now it's trading at about 156.48. A lot of these interventions don't work very well. Now, the reason why the intervention is taking place is the yen has been weakening too much, and the dollar has been strengthening in relative terms. And that was because of the yield differential between the Japanese bonds and the US bonds. Well, they need to raise rates. Well, and change that dynamic between the yield differential between the Japan and the United States. So they intervened in the market and decided to strengthen the currency. This potentially could go all the way down to 148. Who knows? But sometimes these interventions, if they're not coordinated, they mean revert. But because it is coordinated, I suspect that it's going to break the 150 and be maybe at the 48 handle for the USD to Japanese yen. The S&P 500 is trading at 7,543. I have a target of 7,600 for year end to 7,800. I changed my range. I think that in that range of 7,600 to 7,800, you may want to, if you have a passive portfolio, you may want to move about 1/3 of your equities into cash or cash equivalents, not bonds, cash or cash equivalents, meaning CDs, or just hold it into some sort of cash account. Wait it out where you have this big drawdown on the S&P 500, and then go back in and plow in that 1/3 or pieces of that 1/3 of cash back into the market, so you are able to capitalize on that drawdown. Now, Tom Lee thinks that this thing's just going to keep on going up. I'm a little concerned about the AI bubble. I'm a little concerned about the yields on bonds, the bond vigilantes, debt of the nation, war in the Middle East, the midterm election in the United States. The Federal Reserve looks like it may raise rates. That's going to also perturbate the bond market. Things are going to be a little bit tumultuous in the next 2 quarters. So I think because of that, I am less confident that we're going to get to the 8,000 mark. Earlier in the year, I thought we would hit about 7,800 to 8,000 for the S&P 500. I'm taking that forecast off the table. I think it's going to be 7,600 to 7,800. And somewhere in between that 7,600 to 7,800, I think it would be prudent to put 1/3 in cash and just wait it out. Kind of do the Warren Buffett method. Just kind of wait it out. Wait until the blood's on the streets. Now we're talking about maybe a 10% downdraft of the S&P 500. But there are support levels. Those support levels are 7,200, 7,000, and 6,800, around there, about 6,800. That's based on a fib sequence. So you have strong support levels. Now the 7,200 is not as strong as the 7,000, and that 6,800 is relatively strong. So it's possible that we go to around the 7,000 range, maybe 6,900, 6,800. Those would be perfect times to purchase more equities. Now, what will probably happen is we're going to try to test that 7,600 resistance level. We may break it. And when we break it, it may go to 7,700, and that might be the time to start moving some of that cash. Move the equity part. Move a third of your equities in cash and cash equivalents. That's what I think that is the prudent way to manage this little tumultuous third and fourth quarter. Probably the semiconductors are going to have some problems too. Now, for the ones that have been paying attention, SSG, which shorts semiconductors, that's moving up. That's trading at 1449. There's a trading range at about 1250 to about 1550, 16. So it looks like, there's some stress in the semiconductors. But the equities are up. It's at 7,551 at the moment. Now, the euro is trading at 115 right now. And Bitcoin has been relatively stable at 63,000. Oil is trading at 78.86. I have a hedge position. I have a long and a short for futures in oil. And VIX is trading at 1614. Now, for ones that have been paying attention to me, when the yen starts to strengthen and the VIX starts to creep up or spike, you have to worry about equities. So right now, the intervention in the market with the Federal Reserve and the BOJ has stabilized. It's not creeping up into the VIX index. That's a good sign. But if we start seeing 22, 25 numbers for VIX with the yen strengthening, we have a problem with equities. And this is the reason why I'm telling you, start preparing, not yet, but start preparing to move some cash on the sideline and wait it out. But don't sell the whole thing. Don't sell your whole equity position. You want to take about 1/3 of it and put it in cash or cash equivalents. The natural gas is trading at 2.756. And right now I have a short position on natural gas. So I have short positions on oil. I have a short position on natural gas. And I also have a hedge position longing oil because of who knows what happens. There's supposed to be some negotiations taking place. Those negotiations will probably take place on Monday, Tuesday, start collapsing on Wednesday, and I would not be surprised that oil will spike Wednesday night or Thursday. So I'm kind of hedging for that possibility. So that's where the market is right now. The Gush is trading at 38.56. It's trading down right now. Now Gush longs energy companies. That's probably because the futures market for WTI is going down, so Gush is down. And DRIP is a little bit up today at 41, 46. I do not have a position in either one of those. And I do not have a current position in SSG right now at the moment. So with that, please help support the work that I do by making sure you subscribe to all the channels. I have YouTube, Brighteon, Bitchute, and Rumble. You can follow me on X, GETTR, TikTok, Substack, and be a paid member to my Patreon channel. And by doing that, you're helping support the work that I do. All of these videos are for free. And go to my store, the-studio-reykjavik.com, and improve your health. Let's just talk about some products that I have before we continue on with the news. I have probiotics, very high quality probiotics. You can get them either in the veggie cap form or in the powdered form. Now with these probiotics, you're going to improve your gut biome. You're going to improve your metabolism. You're going to improve your absorption. You're going to bring down inflammation. You're also going to improve your skin and brain function. Your sleep pattern will improve. You're reducing leaky gut syndrome. And you're also improving your immune system in your gut. So good health starts at the gut. So please go to my store, get the powdered version, which is the one I take regularly, or the veggie cap version. Either one, but take them every day. Please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order.
People trust you. I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands. The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Mumbai. This is Bloomberg.
Only 5 legislative days left before the Senate's scheduled August recess. The upper chamber now in a sprint to pass any piece of the president's agenda. Lawmakers telling Maria on this program their priority, passing a continuing resolution ahead of the October 1st deadline. Watch.
The Democrats are going to shut down government October 1. We have to, whether we fund it through reconciliation or through a continuing resolution. Remember, everything will get shut down again. This will be the 4th time in 2 years by the Democrats. So we've got to figure out how to fund the government. Like just how do we fund ICE and CBP through reconciliation?
So you think we're seeing another government shutdown on the horizon before the midterms then?
Absolutely.
You've got the Clarity Act, you've got the continuing resolution, you've got the NDAA, you've got the Reconciliation 3.0. Are you moving on any of this? You've got 1 week left. What's the priority next week?
Well, I feel like we're trying to put 20 pounds of potatoes in a 10-pound bag, but we need to prioritize, get as much done as we can, starting with funding of the government. Remember, Chuck Schumer, big government socialists, they shut the government down 3 times already, so it's time to move that, and hopefully we'll get on these other bills as well.
Senate Majority Leader John Boone releasing the text for a CR to fund the government through the 11th of December, which does have Democratic support. I want to bring in Florida Congressman Randy Fine. He also sits on the House Foreign Affairs Committee. Congressman, it's good to see you this morning. And this proposed CR in the Senate is different from what the House already passed. I want to get your initial thoughts on what you see in this text.
Well, we're just getting the text and we're taking a look at it, but it is a good step forward that the Senate is proposing to keep the government funded. Make no mistake, Democrats will shut the government down right before the election because they believe it benefits them politically. So being able to keep the government open and take that issue off the table, I think is not only a political winner, but it's a winner for the American people.
One of the things that Susan Collins said, and she's the committee chair here, she said she's pleased that this bipartisan agreement prevents the Office of Management and Budget proposed rule regarding federal financial assistance from taking effect. What did you make of that? Because this seems to be the reason that it became, bipartisan supported.
Well, Democrats want to reduce the federal government's ability to restrict funds from states and local governments that refuse to work with the federal government. And we're all supposed to be working together for the benefit of the American people. But when states and local governments hide illegal immigrants from federal law enforcement agencies or do other things that damage the federal government should have some say. This continuing resolution would reduce the federal government's ability to do that, but we have to take a look and see if it's worth swallowing that hard in order to keep the federal government open.
Okay, certainly, yeah. A shutdown into the midterms would be disastrous probably from both sides. Republicans have really struggled to pass the president's agenda, and there's new polling that reflects Americans are frustrated with the majority party. A new CNN poll finding Democrats lead Republicans by 8 points on a generic ballot. Democrats also holding a significant advantage in voter enthusiasm. Congressman, we're less than 100 days away from Election Day. What can you do? What messaging can be done here to boost support for your party?
Well, I think first off, we have to focus on what we've done, passing the one big beautiful bill, which eliminated all of these taxes on the American people. My constituents have $2,000, $3,000, $4,000 more per year because of those tax cuts. We release it county by county, but I also understand why people are frustrated, particularly because they want the Save America Act passed. And despite the fact that we've passed it 6 times in the House, the Senate hasn't passed it once. They see that frustration. They see the continuing resolution. They need to see us pass more. And I know that's why we're determined to get it done every single day.
Progressive candidates have been gaining traction across the country now. And it's got the Democratic Party worried, including longtime strategist James Carville. Listen to him talk about the rise of socialism.
I'm not sure what to understand what Madonna is doing, but to talk about the larger Democratic Party post the election in Michigan going forward, I am not going to be in the same party with his son Piker. I can tell you that right now. If he becomes a force in the Democratic Party, I'm out of here. I have no intention of ever being in the same political party with that guy. Now, I think that a overwhelming majority of Democrats agree with me. It may be that the two-party system is just going to be under tremendous stress here in the coming months, and then you see it with Tucker and Martin Taylor Greene, and on the Republican side, you see it going on right now. And I can't sit here and tell you for certain how this is going to turn out, but the one thing I can tell you for certain, Hassan Piker and James Carville are not going to be in the same political party.
And the race to watch this week, of course, is the Senate primary in Michigan. Congresswoman Haley Stevens is facing off against progressive Abdul El-Sayed. Recent polling shows he's got a slight advantage, Congressman. I mean, do you think that this helps the Republicans with somebody like him?
Well, I think it helps Republicans. I think it's terrible for America. We need 2 competent, non-crazy parties in this country. And I don't think these candidates are progressive. I think they are insane. The policies that they're advocating would literally destroy the country and are responsible for millions of deaths around the world. That's why Democrats need to do what we've done in the Republican Party, which is push these lunatics like Tucker and Marjorie Taylor Greene off to the side. President Trump excommunicated Tucker. Marjorie Taylor Greene quit. We've dealt with our crazies. We need Democrats to do the same.
Lee Carter's on set with me. Lee, jump in here.
So I think it's really fascinating because obviously there is a rise in democratic socialism. And I think the American people are saying that they're frustrated, the system isn't working, and they want to see something better. But ultimately what I think is primaries reward passion. So we're looking at primaries right now, and we're seeing one after the other. The Democrat socialists are winning, I think in large part because they're speaking to this passion as people are so frustrated they want to try something differently. Ultimately, when we get to the general, I think we need to reward addition, and I'm not sure this does that. How are you going to speak to the American people in the middle, like as we make the pivot from the primaries to the general, the midterms? What do you want to say to them?
Well, it's a great question. I think what rewards in elections is fear and anger. And I think Democrats are much angrier with the successes we've made under President Trump than Republicans are. We feel happy and complacent. But how do we talk to the middle? I think the answer is we have to talk about these insane policies that Democrats are proposing. When people hear the ideas that are coming out of these people's mouths, they gasp and they find it hard to believe these are serious. The Democrats will try to run these people as moderates in line with the American people, but the fact of the matter is they are not. And so we have to contrast our sane policies against their crazy ones. And if we do that, we will win in November.
All right, messaging, there you go. Congressman Randy Fine, thanks for being with us. We'll be right back, everybody.
All right, wanted to play you those remarks there in case you missed them. That was President Trump as he was aboard Air Force One late yesterday, taking questions from reporters, and no question, a lot of that was pertaining to the...
Speaking of taxes in blue cities, a new fight over New York City's tax policy heating up. Mayor Zohran Mamdani is giving homeowners in the Big Apple more time to apply for exemptions from his controversial pied-à-terre tax, which went into effect July 1st. Real estate insiders are now warning about the potential fallout, saying the tax could reshape the city's housing market and drive away wealthy buyers and investors. Billionaire investor Bill Ackman also sounded the alarm, arguing that New York was pushing away the very taxpayers who helped fund the city. And in this post, he talks, Lee Carter, about the fact that it's about the numbers not adding up. And it's a long post from Bill Ackman. But to paraphrase, he basically says that, look, you're going to not only going to drive out the wealthy, but you're also going to depress real estate values. And then when those values go down, the tax collection on those values goes down, in addition to people leaving.
It's a very slippery slope that we're on, because yes, people are going to leave. Yes, real estate values are going to come down. But I think also, very importantly, companies are going to leave, because the leadership is not going to, a lot of people that have these pied-à-terres are here because they want to work here. They want to create jobs here. They want to have people pay taxes here. That means that it's going to impact restaurant workers. It means it's going to impact retail. This has a widespread impact. And we are looking at what he's going after. I understand the numbers seem huge, but when you look in Manhattan, a lot of these are also inherited properties. These are properties that when people bought them weren't worth this much, and people are carrying them on and staying here to work and contribute to New York. And so this is a thing, when you start talking to people who might keep an apartment here, who come here to work, they're saying, you know what, this is not where I want to be anymore. And there is no way to interpret the fact that he's creating lists of people as making them targets. Who wants to come into the city and be a target for the ire, for the anger, for this kind of treatment? I just think that this isn't just about individual people. This isn't just about millionaires. This is about what kind of city we want to be. And if we want to be the kind of city, because we've always said, if you can make it here, you can make it anywhere. This is where we want to draw people who have big dreams, create the American dream, create opportunity for themselves and for more people. And I think this really goes right in the face of that.
And Dan, let's talk about the tax side of this. This is your wheelhouse, certainly, because so initially Kathy Hochul said this would be about 10,000 homeowners. This hit list, that's my word, this hit list that they put out, 960,000 properties were on it. It had names, addresses, valuations of the home. One example, an 82-year-old man in Brooklyn got a letter on his townhouse. He's lived there in Park Slope for 55 years. That is his home. He's facing a $44,000 surcharge. And he says, this is my home. Why are you hitting me with a letter?
So 17,000 letters went out, basically from Mamdani's standpoint, to the bad guys, right? But they're not the bad guys. These are the people that are spending money in New York City, that are fueling the economy of New York City. Why would you want to vilify them? But look, here's the basics of all this. Tax what you want less of. So if you want to tax the rich people, you will get less of them. Look at what's happening in Florida. Florida is embracing wealth. And what's happening? Wealthy people are moving there, and their economy is absolutely booming. So if the mayor wants to continue to go down this path, his return on investment, they're projecting $500 million of additional annual taxes coming in through this. That is not going to happen. Time will tell.
Well, and they're also, again, they're delaying now until September that people have time to respond, because the rollout was such a disaster. I mean, it really was. And people that are supporters, many supporters of Zohran Mamdani on the list. Oops. Yeah, get what you voted for, folks.
Senior editor in Washington. Wendy, just catch us up to date on what the latest is here.
I'm
days forever
confused
on whether there's going to be a
recess
ceasefire or not, given that there was a ceasefire, now there is no ceasefire, and I believe President Trump wanted to give diplomacy a chance, but then he backed off on that. It's not clear to me what's going on.
Well, as we speak, diplomacy is back on, but as you point out, it's changing every minute, and we just don't really have any idea. In fact, I saw a cartoon over the weekend of a man at a gas station saying, hey, if you time it just right, you can fill up your car between when the war stops and when the war begins again. And that's sort of how we all feel right now, right? It's last night, Trump said that the Crown Prince of Saudi Arabia had called him, and on his behalf and those of the U.S.'s Gulf allies, asked him to hold off on these strikes, which of course he was threatening to be, bigger than World War II and all that. But the asked them to hold off because they wanted to have let diplomacy take a chance, and to be honest, they really didn't want to. They didn't want to get bombed again, as they have been. Iran has been bombing sites, U.S. sites, like U.S. military bases, but in their countries, and I think they would like to see an end to this. The trouble is, if I can go on for a moment, we don't know what talks are going on. Trump said that they would start on Monday afternoon. With whom? At what level? Are these technical talks? Are these diplomatic talks? What countries are involved? We have no idea. Trump didn't tell us. We do know that Iran and Oman are talking about finding some way to administer the Strait of Hormuz, which of course used to be a free international waterway, but they're not talking about reopening it either, and the naval blockade is still there. So your guess is as good as mine, really, at this point.
Do we have any understanding, Wendy, whether Congress has any interest in weighing in on this at all? Is there any pressure from maybe the Republican Party for President Trump to get something done ahead of the midterms? What's the feeling in D.C.?
Well, from Congress, I mean, the Democrats are trying. They keep teeing up these war powers resolution votes, which are only symbolic anyway, and Trump has been ignoring the one that did pass. So they keep teeing it up in the hopes that that will happen again. But the Republicans in Congress, who privately are terrified about the outcome of the midterms, which are now right around the corner. It's August. They were in November. And they're watching their polling numbers drop, like a rock. And they would like Trump to focus on affordability and gas prices and things like that, and they just won't. But when it comes to defying him with votes, that's not happening.
Okay, so it just feels like there's a lot of moving parts here. In terms of what kind of role Israel is playing or perhaps not playing at all, what do we know there?
Well, we know that Prime Minister Benjamin Netanyahu was in D.C. last week. They talked, but Netanyahu has been taking sort of a more hands-off approach. Trump announced for that part of the war that he had reached an agreement with Hamas and with Israel for Hamas to disarm and for there to be peace in our time and that, the Gaza conflict. And yet Netanyahu has expressed serious concerns with it. Hamas hasn't disarmed. Israel killed a Hamas leader just yesterday. So, we just don't know what's happening. And we do know that Netanyahu is pushing Trump to still ensure that Iran doesn't have nuclear weapons, which, as I said at the beginning, I don't even know if that's on the table right now. Trump says it is, but we don't know.
Is all negotiations, are they emanating from the Oval Office, or does the State Department have any role here?
I don't know. I don't know the answer to that. Trump said there would be talks.
Yeah, there we go.
That's it.
All right.
Yeah.
Well, we're all just kind of reading the tea leaves like everyone else. I think that's what the market's doing today. Wendy, thanks so much for joining us. Wendy Benjaminson, Senior Editor for Bloomberg News. So all the norms of protocol and I guess, obviously information and news release from the State Department, that's just not, that's a thing of the past.
No, everyone's waiting on what Donald Trump says, but what he says changes day to day. And what amazes me is how literally the oil market takes it.
And I think it probably feels like it has to. I mean,
that's all it can work with, right?
Yeah, that's all it can work with. And it's just discounting the news that's in the marketplace. And again, the most recent news is incrementally positive in that it's gun silent, at least for the moment, and negotiations presumably getting a little bit more support. So you see that in the crude oil market with the WTI crude oil off 6.4%, trading right around $79 a barrel. So that's the market reacting.
Yeah.
It could change today, it could change tomorrow, and that's just kind of, if you're a trader, that's what you're doing.
And the oil surge has huge implications for the rest of the markets, because every time oil goes up, then you've got the renewal of inflation concerns, you've got bonds going down. That changes how people price equities, and equities have not been making new highs for a while. They've kind of been bumping along the top.
Here now to help us break down some of these companies is Alan Ward, Ph.D. and author of Saudi Inc., as well as the president of Transversal Consulting. And so, Alan, so appreciate your time today. Really great to have you on at the show. Wanted to start off with let's start off with Exxon's earnings, which, I mean, again, were held back by some of these maintenance and production disruptions, but still one of the strongest, really, profitability quarters we've seen since 2022. And so what really stood out to you in these numbers?
Yeah, I think it's important to note that oil prices have been really volatile in recent months, but that's definitely paid off for Exxon and Chevron. They both posted very significant increases in their profits for this quarter. Exxon showed their highest earnings since 2022. Their revenue definitely beat expectations, though there were some concerns about how their profit came a bit short of expectations, mostly because they did have some refinery maintenance, and at this time refining margins are extremely high, and so that's where there's a lot of extra profitability coming from, but also because Exxon does have assets in the Middle East. Nearly 1 million barrels a day of their production is in the Middle East, and because they had some shutdowns because of that, there were some declines, noted for that reason. When it comes to Chevron, we also saw very, very strong profits. They more than quadrupled their profits this quarter from the same time last year. Obviously, remember, oil prices are higher, but they have shown an incredible turnaround when it comes to their profits from refining. Their refineries in Russia and also refineries in the Middle East have taken major hits this quarter. They've essentially been shut down. I mean, basically, they are trying to get everything out of the Middle East. Only crude oil is really the focus, crude oil and LNG. And so these countries are not really, sending gasoline or diesel or much else out. And so other refineries have had to pick up the slack. And so we're seeing very, very big profits in those areas. So even when oil prices come down, refining margins are so high that the prices for refined products are not coming down as much. So there's so much money to be made there. In fact, Chevron's downstream made a profit of $4.9 billion this quarter. That's compared to actually a loss from last year at this time. So we've really seen some incredible earnings from these companies.
Alan, one of the big themes in this space, and these two names are certainly examples of it, has been using this time and in recent years to be a little bit more shareholder friendly, hiking dividends, shareholder buybacks. But what stood out to me about Exxon in particular, or not Exxon, Chevron in particular this time around, is that they used this opportunity to shore up the balance sheet a little bit, pay down some debt. Do you think that makes sense?
Absolutely. I think that Chevron in particular has really been doing a lot, and it's not just in the past quarter. It's really, they've been doing this, for, I would say almost a year now, really focusing on trimming their workforce, making it a more lean workforce, moving their headquarters, really trying to do what they can to, be a leaner company while maximizing, the money that they have. They're definitely not shirking on expansion. They're not shirking on, capital expenditures, but they're being smart about how they're spending that money. And so paying down debt, I think, is, it's kind of the theme across the oil industry right now, is that companies are being very, very careful in how they spend their money.
Okay, we have also seen, Exxon, for example, does remain pretty committed to production in the Middle East despite disruptions naturally that are tied to these conflicts. And so how do you see these oil companies continuing to navigate the geopolitical risks against, of course, what is still perceived as pretty major long-term value of those assets?
Exactly. I think that they are taking the longer view, and that's something that they're invested in these countries. I mean, Exxon is in Qatar, they're in the UAE. These are countries with very stable governments. They can't control the stability of other governments, for example, of Iran, of Iraq, or Syria, for example. But they know that the leadership in these countries is committed to, getting their oil out, to making money, and so it makes sense to continue to work with these countries and to invest in assets, because one of the things that we've learned is that we really do still need oil, and we will continue to need oil for a very long time. And some of the best oil assets are in the Middle East. So this is kind of, I would say, they see this more as a blip. It's not as if this disruption is going to suddenly convince everyone that we don't need oil, because the fact is that we do, and Exxon is committed to producing it. And so it's completely understandable that they are not running away from these assets, that they see them as something that will bring them long-term profitability.
Ellen, one thing too that I think we sometimes forget is that they're not just oil; they're natural gas as well. And Chevron, what I think about it, just been last month signed that 20-year-long power agreement with Microsoft, with natural gas sort of powering AI data center power. And we know that's a huge, huge story in general in terms of this AI infrastructure build out and this need for power. Do you anticipate more deals like this amongst these major energy players?
Well, I think it's challenging because I think that these oil majors, particularly in the United States, don't want to necessarily get into the power delivery sector. They've seen, Shell try to do that in Europe, and it didn't really have very good, consequences for Shell. They've really kind of given up on becoming a power delivery or generation company. So I think that when they're signing on to do this, they're really focusing on delivering the product, the fuel, the natural gas. And I do think that while natural gas prices tend to be much lower in the United States, there is rising demand for it, and if they can, make deals to supply data centers with power, it is likely that these will be profitable. I think that you might see some companies not, I would say more the integrated oil companies may be approaching it with a bit of hesitation. They want to see how this goes before they jump in. But we've definitely seen other, natural gas companies, companies that are much more focused on just supplying natural gas, get involved in these deals. And I do think that if it looks like it's going to be successful or profitable, we would see more of that going forward.
Okay, and given, I guess, the uncertainty, so this is a very difficult question, but I mean, like, what are you watching? What should investors be watching now over the next few quarters, or maybe even more mid or near term than that, for both of these names that are obviously still heavily exposed to a huge geopolitical risk that, again, we can't really gauge because no one really knows like a true timeline of when we'll see full resolution. And so with that obviously being said, what are you watching for the next several months?
Yeah, so when it comes to Chevron, I would keep an eye on what's going on in the Caspian Sea, and particularly with Kazakhstan, because they have big assets there, and whether or not there's disruption there in the coming months could be a very important data point for Chevron in terms of future earnings. Overall, I think that it will be interesting to see how these companies respond to the chance, which I think is getting larger and larger, that this is going to be a longer term disruption than was originally conceived. We're entering now the 6th month of this conflict, and there really doesn't seem to be much coming forth in terms of a resolution. So I'd like to see what are these companies looking to do to continue to work around this as a longer term issue that could very well last to 2027 or beyond.
I think a great place to leave it. So appreciate your time today, and great way to close out, of course, this week and this month as energy has been hugely in focus. So really topical time to have this discussion, but appreciate it. Alan Wald, Ph.D. and author of Saudi Inc., as well as the president of Transformational Consulting.
An average client. That's the thing about wealth management, right? In asset management, you're building a portfolio for a fund which has a very clear and consistent guideline. In wealth management, you're often tailoring things to specific clients situations. Having said that, once you get into the 7 figures, we would be building portfolios with at least 20% in alternatives. If you get up into 8 figures, that number gets to 30%, even higher. The key, of course, is about liquidity. Alternatives have seen a revolution in the last 5 to 10 years of semi-liquid evergreen products, which do allow quarterly or even monthly liquidity in some places. But that doesn't entirely release the liquidity constraint of some of the private markets, and therefore understanding the upcoming cash flows for a family is absolutely essential before you allocate. But if you look at the track record for most of these private markets, especially things like private infrastructure now that are more available than ever, some of the hedge funds we work with, Combining those with public markets really is where I think you get the best combination of growth and resilience for portfolios. So that kind of sweet spot, 20 to 30% is where most of our clients would land. More than that for some of the very wealthy families.
All right, David, thank you so much for joining us this morning. David Stubbs is Chief.
So the S&P 500 is trading at 7,569. Again, my target for year-end is 7,600 to 7,800. Please go to my store, the-studio-reykjavik.com, and get the structural nanosilver lozenges. They're perfect for protecting your throat from cleaning the house, prevent the dust from irritating your throat, but also it is perfect for allergies and for the cold season. So get some Manuka honey lozenges or the orange splash lozenges. They're made from structural nanosilver. It'll help to protect that oral pharynx and neutralize. I also have resveratrol. Resveratrol will help with youthful gene expression. It'll also help the basal layer for your skin, so your skin is healthier. This stacks really well with C60 for that basal layer improvement for the skin. Resveratrol helps to soak up the free radicals and boost up the mitochondria. That will help to improve your energy levels, really important. Soaking up free radicals will help to slow down the aging process. And resveratrol helps with that youthful gene expression. Get rid of those cells that are in senescence. Cells that are in senescence collect garbage, they stop dividing, and the tissues aren't as healthy. This is the reason why taking resveratrol regularly, especially if you stack it with C60, will help to slow down the aging process. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order.
Sale still has not closed. To be clear, that's not a sale, and they won't get control over those shares until that sale closes in November of 27. So in the meantime, Charlie appears to be struggling to restructure the business. The former CEO of EchoStar was moved to run the capital, a newly formed Capital Corporation, a subsidiary within EchoStar that was going to invest in new ventures. He left very recently. It appeared he might have been let go, and then they folded that division into corporate development. So it seems like Charlie is struggling for direction here. He has some good assets, to be clear, but the mix of business right now doesn't really portend well for growth anytime soon.
So does that mean that this is a company that's ripe for takeover or at least offers from someone else?
I would think, Scarlett, almost divestiture of the business as businesses, the different units, as opposed to an outright sale of the company. They don't really have spectrum assets left. They sold off most of the spectrum now to SpaceX and AT&T. They do have the geostationary satellites, which have value in the government sector. They've got a wireless business that is growing, but it's very low-end wireless, mostly prepaid, which is not a great part of the market to be in. Then they have they have the pay TV business, which is stuck in secular decline. It's the satellite dish TV business. So my hunch is if we fast forward 2 years, they're going to find a way to divest of all 3 units and find buyers for some or all.
So you mentioned just kind of SpaceX, and you're one of the Bloomberg intelligence analysts that's covering this broad company called SpaceX. Stock's up a couple of percent today, but boy, it's way at $111 a share, way below the IPO price, way below the first print at $150. What do you think is happening? What's the investor conversation around SpaceX these days?
So I think one thing that's weighing on sentiment here, Paul, is that you have the lockup coming off soon. And so a lot of shares may hit the market if the shareholders, particularly SpaceX employees, decide that they want to monetize some of their shares. So, obviously that could put pressure on it. I think also there was almost too much enthusiasm going into the IPO relative to where the actual numbers are. So if you look at Starlink, for example, which is the growth engine, last quarter was 60% of sales. That's set to grow just over 30% in 2Q, and we'll see the actual numbers tomorrow when SpaceX reports, but it's going to be around, call it 30 to 35% growth. Very decent growth, without a doubt, but I don't think it has huge upside. I think the real enthusiasm centered around the XAI business and the potential contribution coming from that business over we'll say the next 2 years. I think it's going to scale up meaningfully. And so that's where all the excitement was. And then as the AI trade kind of cooled off, I have a feeling that sentiment around the XAI business cooled as well.
Got it. All right, John Butler, thank you so much. Of course, we'll be checking in with you following the SpaceX earnings, which is, again, tomorrow after the close. Its first earnings announcement since becoming a publicly traded company. John Butler joining us from Princeton. And Paul, I was just looking at the ANR function on the Bloomberg.
Yep.
30 buys, 7 holds, 2 sells on SpaceX, which is kind of unusual.
It is. I mean, the fault of Elon is pretty broad and pretty deep, but definitely some concerns there. But I think, we said a lot.
The semiconductor industry is starting to move upward right now with the broader index moving up. Again, the S&P 500 is at 7,569. And I've been watching an ETF called SSG, okay? It's trading at 1370. Earlier this morning, it was trading at 1465. So what's happening is semiconductors are moving up today, and this short ETF, SSG, is going down. So if the semiconductors are starting to sell off, then SSG will go up. So just pay attention to this trading range in SSG. It's around 1250 or 1270 to approximately 1550. All right. As we're waiting for Bloomberg to recycle their broadcast, please go to my store, the-studio-reykjavik.com, and get the Zeolite. This Zeolite you can take every day. Take 3 small drops underneath your tongue and drink filtered water. This will bind to heavy metals, toxins, and chemicals, allows you to urinate those toxins and chemicals out of your body within 6 to 8 hours. Again, you can take this every day, 3 small drops underneath your tongue. Now, if you want a heavier detox, what you should do is do 5 to 10 small drops underneath your tongue, drink the filtered water, do that every day until the bottle is done, and do that once or twice a year. I recommend the maintenance method. Again, this Zeolite you can take every day. Now, heirloom barley. Heirloom barley will help to detoxify your body, bring down inflammation, and soak up free radicals. Now, when you do that, you're helping your immune system, your endocrine system, your joint health. You'll recover quicker after a workout. You're also helping with your cardiovascular health and brain function. Why? By soaking up free radicals and bringing down that inflammation, these different systems will perform better. I also have a barley called Gladiator barley. It does everything that the heirloom barley does, but one added benefit, it will help to build muscle. And this stacks really well with Myotrol. So do some resistance training, take the Gladiator barley, and you're detoxifying your body, bringing down inflammation, soaking up free radicals. And guess what? You're also going to be building muscle, helping your cardiovascular health. It's really important. And when you're building muscle, you're also helping with brain function because you're increasing your myokine concentrations and BDNF concentrations, which are neuroprotective. So please go to my store, the-studio-reykjavik.com, get the barley and the Zeolite. It's a great way to detoxify and to improve your different organ systems. Use discount 5, you get $5 off any order. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
Yeah, I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages all higher by at least 1%. And part of the reason behind that is the fall in crude oil prices, which is also lowering yields. Brent is down 5% right now, 83.48 a barrel. The 2-year yield is lower. That is down right now by 4 basis points at 4.25%. The 10-year yield down 5 basis points, 4.68%. So yeah, that's adding to the risk sentiment today. The S&P 500 84 points higher. That's up 1.1%, 75.74 in the index. The Dow Jones Industrial Average is up 604 points, a rise of just about 1.2%. And the tech-heavy NASDAQ 100 up 331 points. That's a rise of 1.2%. A quick look at the semiconductor index. The stocks down just slightly, down 9 points today. One of the big stories overnight, the Kospi in South Korea, that was down 5% after the record surge that we saw on Friday. Bristol Myers Squibb, you would think that would be higher with the news of this possible takeover talk. Bristol Myers right now down 1.4%. Microsoft shares, they continue their surge higher, right now 5% higher. And Amazon joining the $3 trillion club, 5% higher today, so trading at 285.09. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, John Tucker, with our Bloomberg Business Flash. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. And of course, the AI trade is back on. We just talked about Microsoft and Amazon, and we have SpaceX reporting earnings tomorrow after the close. So the earnings parade continues.
Because of that tech trade is moving upward. This is the reason why SSG ETF is going down. But be careful. I believe that the tech industry and the semiconductor industry is channeling down the last 6 months. And so you may have these relief rallies, but the highs are lower than the previous high, and it seems to drift down again. So beware of this channeling effect.
Good morning, Scarlett. Thanks for having me. And Wärtsilä is an international company which provides power systems, power plants to the utilities and data center developers around the world, but also on the marine business. We're a marine company also, which is the other arm of our company, and providing engines, power systems also there on the ships.
So, Risto, you guys are out with a report that says the Americas is in a race to build data centers to power the next wave of AI. But there's a problem out there, you say. the power systems needed to run them can't keep pace with how fast they're being built. Talk to us about that.
Absolutely, Paul. We're actually at the point where data center growth is no longer just a technology story. It's actually a power story. The companies that actually solve the power first will have a real advantage in this game.
Okay, so first mover advantage matters here, but does that mean that there isn't a way to make up for, perhaps not having that momentum early on?
I think the early on momentum went already. We're really looking at the situation where power system grids you're not able to connect hundreds or thousands of megawatts loads anymore. You're actually needing to start looking at the behind the meter solutions. Traditionally, utilities do a long range planning, which are for 15 to 20-year planning cycles. And nowadays, we're looking at the data centers and hyperscalers, which are probably the fastest moving business we have today. And this is not an easy match between these two industries.
What are practical solutions going forward, do you think?
I think we need to start looking at the macro grids, meaning that the building of power plants behind the meter, supporting the data center growth, having them utilizing thermal technology, utilizing natural gas like Wärtsilä engines, but also likely later to implement also renewables, battery storage, and other needs. But as these assets are built for long term, the 30 to 40 years to be operating, these developers who are building these data centers and the power plants really need to start looking at how are these assets future proof? That when and if the grid arrives one day, how are these assets going to be operated at that time?
So Risto, from where you sit, you kind of see the problem big picture. Do you believe that the industry recognizes the extent of this problem? The guys building the data centers?
I think some are starting to realize that. I think we still see, some customers coming to us and asking us to provide engine power plants within the next year or 28. That is not the reality anymore. If you want to build a power plant, you need to start looking at 20, 29, 30, and even 31. To have these assets on the ground and providing power to the data centers.
How about nuclear as an energy option? What do you think about that?
I think nuclear is an option. However, I think all the technologies will have to have a play in this data center boom. Nuclear, of course, on a larger scale, as it challenges what comes to the permitting and building times are tremendously long. We're talking about 15 to even 20 years in some cases. What comes to smaller modular nuclear reactors, that's still a developing technology and not commercially proven, in my opinion.
Do you have a sense of which companies are most at risk in this scenario?
I don't think, we see announcements daily, just another week, Meta and BlackRock announced another type of development where they're actually looking at different type of financial structure, but allowing Meta to spend less on capital on the infrastructure itself. And I think we will see more of this kind of development over the next years. We need to remember that data center business in this scale is only a year, 2 years at the max old. And a new technology, I think, and new business models will be developed.
All right, Risto, thank you so much. Appreciate it. Risto Paltanius is the Vice President Americas for Wärtsilä, which is a Finnish company, trying to come up with some powering solutions for all these data centers. I wonder, I see a lot of data centers moving or being announced that they're going to be built in Texas, and Texas has its own grid. It's not part of the national grid.
Which has not always held up.
This is not always held up. I know they made a lot of investments over the last years after that winter storm that kind of knocked it out years ago. But that just begs the question, how is that grid set up to support a lot of these plants that are, or power centers, data centers are looking to be built there? I wonder how that looks.
Yeah, as Rissa was telling us, it's a race against time. So, and a lot of these projects are moving forward, and they might actually just finish building them, then realize, you know what, we don't have the power to.
Yeah, and it seems like, all we've heard from the data center builders is they're building like crazy, and it just feels like the energy solution is all of the above. I mean, everything's going to be needed, everything's going to be on the table. Maybe not some of the dirtiest coal out there, I don't know about that, but pretty much everything needs to be on the table here, because from what I understand, it's going to be power or electricity. And
for the ones that are watching the dashboard on YouTube or on my website, you can see that the CL future contract for WTI, oil's trading at 79.42, and it's just below that fib sequence of 79.62. So we're at the higher trading range of the 70 to 79 trading range. If it breaks that fib sequence, then the trading range will be 79.62 to approximately $88 a share, dollars a barrel. So, be aware of that level. Now, if we hear something positive about the Middle East in terms of ceasefire and negotiations, then we should see oil start to trade back down to 75. But I suspect that there will be some failures taking place with the negotiations, either Tuesday or Wednesday, and we should break the 79.62 barrier. All right. Before we go to the next video, which is about China, please go to my store, the-studio-reykjavik.com, and get the vitamin C magnesium. This will help with your skin, help boost up your immune system, and help with brain function. Magnesium is really important to take for brain function, especially when you get older. Magnesium and zinc, like I said, immune system and brain function. You can stack these together for max benefit. Please go to my store and get that magnesium and zinc and that vitamin C. Now, I have a great stack here that help to slow down the aging process. Lignans will help to soak up free radicals and bring down inflammation, helps with the immune system and the endocrine system. Turmeric soaks up free radicals and brings down inflammation. Ashwagandha root helps to control cortisol levels and blood glucose levels. Now, you can take these separately, but I highly recommend you take them together. And by taking them together, by bringing that inflammation down, soaking up those free radicals, helping your immune system and your endocrine system, you're going to help to slow down that aging process and have more vitality. By soaking up free radicals and bringing down that inflammation, you're also helping with brain function. If you have lots of free radicals and lots of inflammation at the brain level, you're going to start building up plaques called amyloidosis. And your neurons won't be as healthy. The myelin sheath will start to degrade, and eventually you will have less cognition. The connection between the neurons will start to recede. You don't want that. You want to soak up those free radicals, bring down that inflammation so your neurons are healthy and your neural connections are healthy. In addition, by soaking up free radicals and keeping the inflammation down, your vascular system will improve and less plaque formation. And when you have a better cardiovascular system, you're going to have better blood perfusion towards your hippocampus, which also helps with brain function. So it's really important to pay attention to what I'm saying here. This is something that I do every day. If you just follow my lead, you will slow down the aging process. Now, take the ashwagandha root, take the turmeric, and take the lignans together for that max benefit. You can take them separately, but there's synergistic benefit when you take these together. So please go to my store, the-studio-reykjavik.com. Make sure you use discount 5 and you get $5 off.
Maintain its lead in AI as cheaper open source AI models from Beijing are challenging America's dominance. Experts warn the battle is not just about building the most advanced model, it's about who can deploy the technology fastest across the economy, military, defense, and other critical industries. Ray spoke with Palantir Chief Technology Officer Sham Sankor. Watch.
Tell us about the AI race between the U.S. and China and how you see the backdrop.
I think that we have, collectively, we've put too much emphasis on the model itself. The race that we're really in is a race to realize economic value from these models. The diffusion of AI into our economy, to underwrite American prosperity, to underwrite reindustrialization, as I like to say, to give the American worker superpowers.
Joining me now is Gatestone Institute Senior Fellow Gordon Chang. Gordon, so those that say that we should use these open source models that are coming from China is that we take the technology, we integrate it into our product. Here are your thoughts.
Well, yes, that would be great, and the Chinese are trying to do it. But Chinese investors are not impressed with what China is doing, because last month we saw them flood the tech sector despite all of these great announcements from Beijing. So, for instance, on July 16th, you had Moonshot AI's Kimi K3 model released, and then you had the challenge to ASML, with China announcing it had a machine as well. But the tech investors know that China can't do this. It can come up with some big advances, but can it deploy? Probably not as well as the United States. And remember, the United States has this enormous lead on data centers. The Stanford Index said that in June, we had 5,427 data centers, and China had 449.
Okay, well, but certainly that's good that the United States is leading on that. But China certainly is putting any regulatory concerns aside when they're building out their data centers. We've seen that. They don't, they really care about how it hits the environment. China is also using its control over critical resources and global supply chains as a major source of leverage against the U.S. and its allies. And American companies are now competing directly with China for billions of dollars in African data center deals. This challenging Beijing's years-long push to dominate tech infrastructure across that continent. And China is also signaling it's not going to back down from its state-led economic model ahead of upcoming trade talks with the U.S. and Europe. How should the U.S. view this push by Beijing to continue to grow its economic and geopolitical reach?
Well, we know that the Chinese economy right now is in distress. They reported 4.3% growth in Q2, but nobody really believes that. People are thinking it's like 1%, and you can even make the case for 0 or -1. So China doesn't have that ability right now, and that gives President Trump enormous leverage in conversations with China on these things, and we should be deploying it. Yes, China has important advantages, pharmaceuticals and rare earths, but we've got more cards, especially because the Chinese economy right now is totally export dependent, which means it needs access to the U.S. market because we account for something like 33-34% of global consumer spending. So yes,
So the ones that are watching the dashboard, take a look at that oil future contract CL. You can see that the price curve is testing that 79.62 barrier. It's right now at 79.58.
It's the leverage that we have on China.
Yeah, well, I mean, I think it's important to point out that the Belt and Road Initiative that spending has already occurred from China. I see your point about the economy weak now, but this is their long-term plan, and that's world dominance. And I know that Africa has been a key target for China. And there's this new report now I want to ask you about that details how China is tracking and gathering data on foreign individuals. This witness is following how Beijing uses this as a tool against the U.S. And this is also fueling a push in Washington to restrict Chinese connected technology. And the big story here is the vehicles. People are warning that, any Chinese tech or Chinese car is just a mobile.
Also, take a look at Gush. If this breaks, if the 79.62 barrier breaks, Gush will pop up. Right now it's trading at 39.41. We may see it march up to 40 if oil breaks the 79.62 barrier. Right now it's at 79. It's right at 79.62.
Data collection tool, basically. Maria actually talked to Ohio Senator Bernie Moreno about this. Here's what he said earlier this year about this issue.
These cars have lots of cameras. They send back data to the Communist Party and can be remotely controlled by the Communist Party. Could you imagine letting those vehicles into the U.S.?
There's anywhere, from half a dozen to a dozen cameras on these cars. So whatever's on those cameras is sent back to the CCP?
Yeah, absolutely. So you can imagine somebody working at an Air Force Base. They drive in, these things are surveilling the Air Force Base. They also know who's driving the vehicle, their habits, where they go, where they come from. We would never allow Americans to purchase surveillance devices for the Communist Party of China.
So if we were to have a conflict with China at any point, are you saying that the Chinese Communist Party could control those cars and have them go crashing into things all day long?
These are connected vehicles, so they could actually take over the driving of the vehicle, lock the doors, roll up the windows, and crash the vehicle into sensitive sites. This is the technology that exists in these Chinese cars. We're just not going to let that into our market.
And China's influence campaign also extending to Hollywood. Critics say that these studios have adjusted their content, their business decisions, because they still want to get access to China. Gordon, your thoughts on these threats?
Yeah, the big issue here is going to be Canada, because Canada has dropped the tariff from 100% to like 6% on 49,000 vehicles this year. And the issue is, are we going to allow those Chinese EVs that are in Canada to roll into the United States? So far, the Trump administration has said yes, but I think the answer should be no, for the reasons that Senator Moreno said. We should not allow those Chinese vehicles into our country. We're going to have the same issue with Mexico, because China is going to be making their cars there and trying to drive them into the United States. Fortunately, the Biden administration and the Trump administrations are working have worked to prevent connected vehicles from our roads, but we need to take the executive order from the Biden era and turn it into legislation in the Trump era. And that, I think, is a #1 priority of Congress right now.
All of this as the president is expected to host Xi Jinping next month here in this country. So there's going to be a lot at stake there. We're going to have your voice during all of it. Gordon Shane, thank you for being here.
Okay, so
thank you, Cheryl.
So I was right. So the oil right now just broke through that barrier of 79.62. It's trading at 79.89, and right now Gush is trading at 39.64. So it's starting to move towards the 40 barrier. Now the question is, will it hold? Who knows? It may not hold. But there's definitely a correlation between Gush today and the oil market, the energy. All right, before we continue, please go to my store, the-studio-reykjavik.com, and get the Clarity Factor. Clarity Factor will allow you to concentrate. Hey, maybe you'll be able to concentrate and make some money. All right, but all kidding aside, Clarity Factor is really important for your brain function. It's a great neurostack. What this will do is allow you to get rid of that brain fog, allow you to concentrate, and over time you're going to improve that positive neuroplasticity. So your neurons will connect, the dendritic connections will improve. You'll be able to think faster and have better memory. And by having better brain function, you'll actually sleep better too. So I highly recommend getting Clarity Factor. Take it every day. Myotrol, very important to take if you're 40 years of age or older, to help build muscle. When you're older, you don't have the gene expression to build muscle as easily compared to when you were younger. When you get older, your genes methylate and gene expression changes. Well, you can slow that down and you can reverse it in some cases. Now, Myotrol will help with the gene expression because it has polyphenols, flavonoids, and lignans to help with that gene expression for muscle. Do some resistance training, take the Myotrol. This is going to help build that muscle and help the health of the mitochondria, so you have the energy to maintain that muscle. Now, if you're an athlete, younger or older, you'll benefit by taking Myotrol to gain strength for your sport. I highly recommend stacking this with the Gladiator Barley to help build muscle. Now, you don't have to be Arnold Schwarzenegger, but by building muscle, when you're older, you're also helping with brain function. By helping with increasing the concentrations of myokines when you're building muscle, that's going to be neuroprotective, really important. Plus, you're increasing your concentrations of BDNF. So please go to my store, the-studio-reykjavik.com, and get the Myotrol. And again, it stacks really well with the Gladiator Burrow. Now, omega-3 helps with cardiovascular health, keeps inflammation down, helps to control your lipid profile, helps to bring down LDL levels and increase your HDL levels, and helps to reduce the overclotting of your red blood cells. This is super important. And with good cardiovascular health, guess what? You also improve brain function because you have better blood perfusion to your hippocampus. Vitamin B complex. The first 4 B vitamins are really important for the electron transport chain. Why is that important? It increases your energy levels. So when you're increasing your energy levels, your cells will be able to perform better. Your organ systems will be able to perform better. Your cellular metabolism will improve. And by taking vitamin B12, you're protecting neurons. So this is the reason why it's super important to take every day. Now, when you're soaking up free radicals, keeping the inflammation down, boosting up your energy levels, you're hitting a lot of the components of what aging is. Aging is about less energy. Inflammation increases. With aging, your free radicals increase. So if you bring these aging factors down, you're going to slow down the aging process. It's a really simple concept. But if you do it every day with a holistic approach, you actually are healthier. You won't have to be dependent on pharmacopoeia. Most diseases in the United States, the 3 common ones in the United States, most of them are self-induced. Everyone wants an excuse. No one wants to admit that they're the one at fault. But diabetes, heart disease, many cancers are self-induced. So guess what? You gotta look in the mirror, decide you're gonna take control of your own health and stop being dependent on a physician, stop being dependent on Medicare and Medicaid and your insurance company. And if everyone did this in the society, our healthcare costs would go down tens of billions of dollars. But many people just want the easy way. It's never their fault. It's never the patient's fault. No, never. Never. Most of the diseases are self-induced in the United States. Please go to my store, the-studio-reykjavik.com.
Results beating estimates, and there was an upbeat revenue forecast for 2026 as well, but clearly not necessarily filtering through the stock today. Bloomberg Intelligence's Wu Jin-ho does weigh in for its more upbeat future, saying that Seagate does continue to capture scale benefits from cloud demand for higher capacity hard drives because of the AI infrastructure build out. And they also very much enjoy this pricing power at the moment. And on top of that, there is build-to-order visibility and operating discipline that can drive continued margin expansion. Not doing so hot for the shares today, but seems like a more optimistic outlook longer term. Marriott, of course, we did get the earnings results earlier today. A little bit of disappointment there. So ticker MAR, those shares are currently down about 6.6%. Again, it's second quarter adjusted EPS beating estimates at $3.19 versus $3.05. And the 2026 outlook also upbeat, but it really was the downbeat forecast for its third quarter that really hurt those shares. I mean, Bloomberg Intelligence's Brian Edgar, I know we'll hear from him later, but the preview of this view, it was really all about the second quarter RevPAR, right? This is the revenue per available room. That was a disappointment to investors.
All right, and as you mentioned, Brian Edgar with that research, we'll be speaking with him later on this hour on Bloomberg Intelligence. Christina Kino, thank you so much. She is managing editor for Markets Live. You can check out her work and her colleagues' work on MLive Go on the Bloomberg Terminal. And for more conversations like this, subscribe to our Stock Movers reports available on Apple Podcasts, Spotify, or anywhere you listen. These are 5-minute audio reports on the biggest winners and losers in the stock market. We got some data this morning on manufacturing that looks fairly encouraging. For the month of July, 55.6 was the print. Anything above 50 indicates expansion, and this is a better than expected read for this part of the economy. Susan Spence is the ISM Manufacturing PMI chair and joins us right now from Old Saybrook, Connecticut to talk to us about the data. This is encouraging, but manufacturing is also not a huge part of the economy, right?
Right, it is certainly an encouraging report. Manufacturing employment is only 10% of total U.S. employment, but we've always said what happens here, it happens here first and ahead of everything else. So I'm really pleased to report that we had a beat on the consensus estimate at 55.6. The most important and significant thing to me in this report is employment is finally entering in expansion at 52.8. 33 months at contraction for employment. So I've been saying I've only done the report for a year, but I've been saying since at least last summer, I did not believe that the employment was going to turn around until these businesses felt comfortable that they understood what their cost was. And with tariff chaos, that was really tough. But we've had a Supreme Court ruling after our survey closed, but just a few days ago, we did find out what the Section 130 tariffs are going to do. And more importantly, the new orders started flowing about 7 months ago. So we have 7 months of new orders in expansion, 9 months in production, 1 month of employment, backlog 7, all going in the right direction. And while prices are still high, very high, 71.1, we've had 3 months where the volatility is starting to settle down. So I'm really super encouraged about that. And then the sentiment is really, really good. Just a few months ago, we had sentiment where we'd have twice as many negative comments as positive. That is turning around. If you couple all that with the semi-forecast we just came out with a few months ago, which is fairly optimistic, we're going in the right direction. The risks remain a prolonged Iran war, prolonged price volatility. Lead times are starting to be an issue that are a negative for these suppliers. But again, a quicker rather than not quicker end to the war will help. And, you know, prices, we have consumer sentiment. UMich had their survey that came out. That one's looking better. I've seen unemployment claims and continuing claims settling down a bit. So I feel like we're certainly in the right direction, but employment was key, and that's finally moving. We'll see if it continues.
Susan, one of the pillars of President Trump's domestic economic policy was to bring manufacturing back to the U.S. Are we seeing that anywhere in the numbers? Is that reflected?
We are not seeing it, and not only am I not seeing it reflected, it would be reflected in comments. The comments that I've seen more often than not, but they're not the majority, certainly is the manufacturing footprint and reshoring. 1 or 2 comments about that, but it's not been prolific. And we've had from time to time, and I do try to include them if I see that in the report, that the opposite effect has been going. So when our survey takers are commenting on that, what I've seen more often than reshoring in the U.S. is we're just going to go to a country where the tariff isn't that high. So with the IEEPA ruling by the Supreme Court in February, and now we know as of this Friday, 60 trading partners, 99% of GDP, 10 to 12% tariff. Now that's a certainty. So it has not resulted, at least in these 18 sectors and the hundreds and hundreds of surveys that we get, that has come to pass.
All right, Susan, thank you so much. Susan Spence is ISM Manufacturing PMI chair on the latest data on manufacturing and across the different measures. It does look like everything was better than expected. ISM employment in expansion mode after it was shrinking in the prior month. ISM new orders also better than expected. Prices paid lower than the prior month. And ISM manufacturing, once again, that print of 55.6 for July. We talked about how it's M&A Monday. There is some deal making in fintech.
Sure, why not?
Visa making a purchase, buying BioCatch for $2.4 billion in cash. This is a fraud prevention firm. Let's bring in Bitchute. She is our global fintech and payments analyst, joining us from San Francisco. So is this a part of the business that Visa really needed to bolster that it didn't have already? BioCatch using artificial intelligence to detect fraud?
Yes, hi Scarlett, always a pleasure to be here. So that's a good question, right? Visa actually did a CyberSource acquisition in the past. So it's important to understand why are they dropping this kind of money for BioCatch. But what BioCatch actually does it evaluates user risk before the payment actually happens. It's during the account registration, during the login, during the profile updates and navigation. That's what is new. So the business itself is not new. Visa has a risk and security solutions business, which actually generates a $2 billion revenue. That's what our estimate is already. And this basically adds to it.
Diksha, talk to us about AI in the fintechs and payment space as it relates to fraud. I mean, that's always one of the big risks in the payment space here. I would think AI would enhance, if I'm a criminal, would really enhance my ability for fraud. How do the companies think about that?
That's very true, Paul. And if you notice and if you read the tea leaves, these card networks are obviously quite ahead of the curve in terms of identifying that issue, right? So you're right, AI has actually accentuated fraud. It's a topic that is in every bank boardroom. If you think about what happened with Mythos, the Anthropic model, it exposed a lot of vulnerabilities. So financial fraud overall is growing. And within payments, what is happening is the traditional gateway tools that authorize, they struggle with the APP scams, which is basically when a legitimate user is tricked by a scammer into approving a transaction themselves. So they make the credentials, device, and OTP look valid. What companies like these, like BioCatch, do is that they detect cognitive behavior and indicators of coercion. Basically, if you're taking a long pause, if there's unusual navigation behavior, or the phone call patterns during the session, and that helps them to prevent. So this is preventative threat intelligence, as opposed to when you are acting or in the moment of the payment. So Visa and MasterCard are both strengthening their aperture, to basically address these issues and also help their clients with it.
So they're trying to come up with solutions. As a consumer, how would I experience the use of BioCatch in preventing fraud? Would I not be able to make a purchase, or am I going to get an alert? How would it affect me?
Yeah, Scarlett, I'm yet to take a look at what exactly is the modality of it, but if you were to take a cue from what Visa did with CyberSource, a lot of this happens in the back end. The holy grail is actually walking a very tight rope, wherein you approve most or all of the good transactions, and you block as many of the bad transactions without actually blocking the good transactions. So that's what all these companies are trying to approve, and authorization rates are one metric with which all of the payment companies actually sell their services. So they go and boast about their perfect authorization rates and minimal fraud rates. That's the metric that they're judged on by the merchants.
I've got at least one Visa card in my pocket, so I applaud this deal. I think they can help cybersecurity. So Diksha, real quick, just for Visa, just for example, over the last, 10 years, how is their fraud rate, whatever you look at, has it gotten better or worse? What's going on out there in the marketplace?
So actually the metric I would watch for this, Paul, is how are they doing on the revenue side? Because like I mentioned, this is not just strengthening their own internal fraud protection, it actually is generating direct revenue for Visa. So to give you an example, Visa is actually creating a lot more of this services revenue line. And we project that their services business by itself could be about $15+ billion by 2027. That's about 31% of their revenue, from $10 billion in 2025. So the fraud and risk and security solutions itself is doing $2 billion annual revenue run rate right now. And I think they're trying to build and catch on this opportunity that has come along with increased requirements. And by the way, the timing is amazing because a lot of global regulators are increasingly holding the banks liable for social engineering and scam losses. So this allows Visa to kind of bring a very monetizable solution to sell to financial institutions facing these numbers.
Makes a lot of sense. All right, Diksha, thank you so much. Diksha Gera is our Bloomberg Intelligence Global FinTech and Payments Analyst on this M&A deal in the FinTech space. Visa buying fraud protection prevention firm BioCatch for $2.4 billion in cash.
All right. The S&P 500 is trading at 7,577. And like I said, in the range of 7,600 to 7,800, you may want to take some cash and put it aside, sell off some of this equity and put it in cash or cash equivalents, wait it out, because I think that there's going to be a 10% market correction. I'm a little concerned about what's going on in the Middle East. I'm also concerned about, even though we have a relief rally in tech right now, I suspect that there's going to be another downdraft because of the AI bubble, and that's going to affect the tech Mag 7, the semiconductors. So, but right today is copacetic. Everything seems to be hunky-dory, but I'm a little concerned about year end. So just be prepared for that. The oil market is trading now just below that 79.62 resistance level. It popped above it and then came back down. Right now, Gush is inching towards 40. It looks like 40 is going to be a resistance level. And what's interesting is that 40 was close to Friday's close. Right now it's trading at 39.80 at the moment. And oil is trying to maybe come back up and retest the 79.62 barrier. Natural gas is trading at 2.76. Right now, what I have is I have positions to short oil. I have some positions to long oil. So I have a hedge strategy for oil markets, and I'm shorting natural gas. And right now, again, natural gas is trading at 2.763. With that, please go to my store, the-studio-reykjavik.com, and get the olive leaf extract. This is dual purpose. It's going to help to bring down inflammation, help to control your lipid profile. And when you do that, you're helping your immune system, and you're also helping with your cardiovascular system. So it's dual purpose. You should be taking it every day. And with better blood flow, you're also improving brain function. Digestive enzyme complex, really important to take if you're 40 years of age or older. This reduces the load on your pancreas, so you have the enzymes to break up the proteins, the carbohydrates, and the lipids. You'll be able to absorb your nutrients more efficiently with less digestive stress. Plus, digestive enzyme complex has bromelain, which helps to break up clots. So it's also going to help with cardiovascular health. Vitamin D3, dual purpose. It's a gene expression cofactor. It also helps to strengthen bone, helps to boost up the immune system, and it also helps with cardiovascular health. So it's dual purpose. Should be taking it every day. So please go to my store, the-studio-reykjavik.com. Use discount 5 so you save some money. Take these supplements every day to help slow down the aging process. They work, but you have to do it every day. And apply a holistic approach to your life. Proper diet, proper exercise. Make sure you do some balancing, exercising, and stretching. More resistance training than cardio. Maybe a 65-35 split, 60-40 split. Stay away from sugary foods. Stay away from processed foods. And get better sleep. Make sure you sleep and get into those 3 to 5 cycles of REM sleep. Now, if you have a problem with that, make sure you take my Good Night formula. That will help you to get into those cycles of sleep. And learn new things. Talk to people. Read, write. When you do this holistic approach with taking the proper supplementation, you're going to live a much longer life. And you're going to be living longer, more years with vitality. A lot of people are starting to see the baby boomers aging, and they're needing walkers and, rolling devices to get in and out of a car and move around. They're starting to age. Build up denser bone and more musculature, especially in the back. If you build more musculature in the back, you're improving your posture, you're strengthening your spinal cord, your vertebrae, right? And you're also strengthening the bone density of that vertebrae. And with better back posture, you're also improving lymphatic flow and also venous return flow to your heart. So you're improving cardiovascular health, and you're also improving immune system because you have better lymphatic flow just by improving back muscles. Now, another important feature to slowing down this aging process is make sure you build muscles in your legs. That way your bones will be denser, your hip will be stronger, and you'll have the muscles in the leg to mitigate some of the problems of gait and movement. You look at people that are older, they can't move around. Now, what's part of that reason? It's because they have poor lymphatic flow, they have poor venous return flow, they may have edema, and also their musculature is poor. If you build better calf muscles, that's like your second heart. That's going to help to push blood back to your heart, that venous return flow. So building more muscle in your legs will help you slow down the aging process so you're not in a walker at age 70. Now think about this for a second. Individuals that went in the Apollo program for the astronaut program back in the 60s, they lived, most of them lived a long life. Some of them were in their 80s, 90s. They were extremely fit individuals, highly trained. They were trained in aeronautics. They were pilots, so they could think in 3 dimensions. Pilots think in 3 dimensions. They were extremely fit. They were athletic. They had an athletic physique, and they were intelligent. They had strong understanding of data and being able to work with it. So they had high IQ, they were fit, and they had this ability to think in a 3-dimensional way. All right, so what could you learn from the Apollo program to help slow down aging? Because I believe in the concept that you can learn from, you can learn a lot about aging and how to slow it down by geriatric medicine, sports medicine, and even medicine that was learned during the Apollo program. Musculature, and being able to have better flow of blood. All right, so now why am I saying this? These pilots that were flying around, all right, when they were training for the Apollo program, they had to do lots of flight time. They had to control their blood pooling from their leg because of the G-force. So they had to tighten their muscles and tighten their core to be able to prevent the loss of blood from their head. Because if you pull a G-force for too long, then you can pass out. But if you can hold and contract your musculature, it holds the blood into the brain. All right, so they did this regularly. Now that they ran and they lifted weights, and right, so they were extremely fit individuals. Now think about this. What can be learned from Apollo astronauts to help to slow down the aging process? Because most Apollo astronauts were not in walkers at age 70. So you can learn from these things and prevent it. I went to have a haircut yesterday, and I saw these baby boomers, and they barely could move, and they needed a lot of help, right? And they weren't overweight. Their BMI was relatively in line. 2 males, 1 female, and they just were having a hard time moving around. A big part of this problem is because they didn't do the weight training that they needed to strengthen the bone and strengthen the muscles. And again, there's added benefits. By strengthening the muscles, it helps with the brain function. And by strengthening the muscles, it helps the immune system and the cardiovascular system. So you can learn from the Apollo program here on how to slow down the aging process. Now, the Apollo program wasn't focused on how to slow down the aging process. They were focused on making sure that their astronauts survive the rigors of spaceflight. But they were elite athletes. They had elite physical characteristics. And you can take some of the lessons learned from that and apply it to your life to help slow down the aging process. So if you don't pay attention to what I'm saying and you just atrophy away, you in age 70s, maybe even earlier, will need your walker. You'll have problems getting off the couch and pull your back muscles and all this stuff. And it's a downward spiral. And because you get weaker, you start to lean on one side and create more problems with your joints. And it's a cascade. It keeps on going down and down and down until you fall, you break your hip, 2 weeks later, you're dead. So you either take my advice or don't take my advice. It's up to you. But I am 100% correct on this. 100% correct.
Only companies that have reached that size, pretty incredible when you consider that Amazon had been mired in a sell-off for much of the last 3 months. All right, let's head over now to our colleagues at BTech. Bloomberg Tech anchor Ed Ludlow getting ready to speak with Matt Garman, the CEO of AWS, Amazon Web Services. Let's join them now.
AWS CEO Matt Garman joins us now on Bloomberg Television and Bloomberg Radio. Matt, it's great to have you back on the show. You know, this is the fastest growth for AWS in nearly 5 years, but to kind of capture a moment in time, can we start by talking about how much of that was driven by the frontier labs, the big ones, OpenAI and Anthropic, or how much of it was something broader across the enterprise, something bigger in AI?
Yeah, it's actually across the board, this growth that we're seeing right now. And much of that is some of the AI labs that are building their models on top of AWS. But actually, a lot of that growth is spread across all of our startup and enterprise customers, where AI is really impacting almost every single industry. And so whether it's financial services companies or healthcare companies or retail companies or media companies, really that growth is coming across the board as companies of all different sizes and all different industries are looking to use AI to grow their business. And so we're seeing a lot of growth from the top frontier labs, but for AWS, we're not like some others maybe that's concentrated on just 1 or 2 large customers, but it's actually growth from a really broad set of customers, which is nice to see.
Matt, when AWS says the AI business has a revenue run rate of $25 billion, what does that mean? What does the figure encompass?
Yeah, that includes both training from very large companies like Anthropic and OpenAI and other large tech companies, as well as many startups. But it also, and then a big chunk of that is really inference that broad swath of companies are doing. And so as companies think about how they take models in something in Amazon Bedrock and run those models to get value out of their business, some of them are automating processes. Many of them are running agentic workloads that they build on AWS to further drive efficiencies in their business or deliver new customer experiences. We consider all of that work, whether it's agent growth, whether it's inference, and some of that is training new models. All of that encompasses the AI business for us.
I think I've asked you this question at various points in time since you became AWS CEO, but is there a percentage split right now, training versus inference, that you can give me?
Yeah, you do, and it actually keeps shifting, I would say. More and more, it keeps shifting more towards inference. I think we still see large training clusters being used by a number of companies, but as these models get really popular, really powerful, more and more companies are integrating that inference into their workloads. So, I don't know the exact percentage today, but it keeps shifting more and more towards inference, and we expect that to continue as the economics make sense, where you really want most of that cost and spend being where value is being created for end customers.
Amazon's overall CapEx number for this year is very big, $220 billion. So it's up 20 billion. And Andy Jassy explained that's mostly AI, but it also accounts for higher memory pricing, right? CapEx higher because the cost environment's higher. But from AWS's perspective, what's the trajectory for next year? You expect that CapEx will be bigger still? Because I think one of the things that Amazon was quite clear about is that even at $220 billion, it might not be enough to meet current demand.
Yeah, one of the things that we're quite excited about is just the potential business for us is just massive. And we see this as a huge opportunity for us to really invest and help customers take advantage of the AI opportunity. And so we will keep investing. We think that there's a big opportunity for us and for customers. As Andy kind of called out last week, we have really great insight into what that demand is going to be from customers. And so when we invest, and we will keep investing in CapEx next year as well, we have great insight into when that revenue is going to land. And so it's pretty well known for us. And as Andy mentioned, much of our capacity is already spoken through the end of 27 and even through much of 28. And so as we're investing, we're getting 5-year commitments from customers. We're getting these long-term commitments. And so we're out there making investments to keep being able to grow the business and try to meet customer demand. But as you say, today, demand still significantly outstrips supply, and we're trying to build and invest to keep up with what customers are asking for.
And so we expect the CapEx number will be bigger next year than it is this year?
I expect us to keep investing as we see opportunities, and some of that we'll see how the market continues to grow. But right now, we're excited about our investments, and we'll continue to invest.
The chip business has also got a lot of momentum. You know, Trainium for some time has been a big part of the strategy, and we've discussed that. I've been able to go to Austin, spend a lot of time in Annapurna Labs to look at the server design. Let's start by asking, when you say the chip business has a revenue run rate of $25 billion, what does that mean? That is the business of selling the chips to third parties or renting out capacity based on the chips?
Yeah, we're renting out capacity based on those chips. So today we run all of our own chips inside of the AWS cloud, and that includes both Trainium chips as well as Graviton chips, which are general purpose processors. Graviton is incredibly popular. We've been building Graviton for many years now. And in fact, almost all of our large customers use Graviton as some part of their deployment. And it's a key part of how help customers deliver extra value by lowering their costs. Trainium is wildly popular. And as we've mentioned a couple of times now, we're largely sold out through the end of next year for Trainium capacity. It's really, really popular. We're starting to see both large customers as well as startups really love the cost benefits of running on Trainium, and having that choice in a cloud where you can run on purpose-built processors like Trainium that give you really great AI performance, together with NVIDIA chips for when you need some of that processing for GPUs as well, gives customers the right mix that they're oftentimes looking for. And so we find that combination to be quite powerful, and our Trainium 3 chips are really, really popular with customers right now.
We're live on Bloomberg Television and Bloomberg Radio. This is Bloomberg Tech in conversation with Matt Garman, the CEO of AWS. Explain the difference in economics between capacity based on Trainium and capacity based on Blackwell, for example. Like, what is the selling point of going with Amazon Silicon?
Yeah, we think that, we think customers want choice. And so we offer great offerings for both products. Some customers really like to build on NVIDIA GPUs, and those are fantastic. And we're one of NVIDIA's absolute largest customers in the world. We've been offering NVIDIA GPUs in the cloud for over a decade now. And AWS is the most scalable and secure and stable place to run NVIDIA servers anywhere. And so we're very excited about that business. But when you add Trainium, we're able to lower the costs for many workloads. And so customers like to have that opportunity where they can take these really massively scaled AI workloads or inference workloads where we can tune them, because we kind of control that whole stack. We have control the Trainium chips, the data centers, and the inference stack, and can really tune that whole stack. And that helps customers lower their costs and improve performance. And we're really starting to see that flywheel go, where model providers of all types and customers love that they get that value and great performance. And we think that that's a real flywheel that we can keep turning, and are quite excited about continuing to grow that business.
Could you make it tangible for me? What is the cost saving?
It's workload by workload, so there's not like a specific cost savings, but for workloads where we see this optimization happen, customers can oftentimes save 20, 30% off of their inference costs when they run that on training.
Interesting. Would you consider selling the chips outright as opposed to renting capacity based on them?
Yeah, we've mentioned that we might consider that in the future. Right now, we have so much demand inside of the AWS cloud that we really love that business, and so that's the place we're focusing right now. But it's an interesting opportunity, and it's something that we would definitely consider in the future.
The other big development was AWS signing the open weights letter. You yourself, communicated that. Why was it important to you, Matt, to sign that and participate in that?
Yeah, I think that, again, a lot of this boils down to customers wanting choice. And the big frontier labs have awesome models today, whether it's OpenAI running on Bedrock, whether it's Anthropic running on Bedrock. Customers really love using those models, but they also like being able to customize models. And so having a broad ecosystem of open weights models, I think is incredibly important for innovation. It's important for our customers. And so you think about things like the Nemotron models from NVIDIA, or you think about Kimi 3 or some of the Chinese open weights models. Those really help customers be able to customize to their own data and really be able to innovate. And so we think that it's important to not over-legislate there and give that flexibility for customers to use whichever models they find to be the best fit. And that's actually why we really focus on having all of those available inside of Bedrock so that customers can choose which ones they want to use.
Not to over-legislate. I mean, I had a conversation with Jensen Wong the day the letter was posted about why then, what was the rationale? It does seem like the concern is that the US government overly regulates open models. Was that a sort of a motivation for you?
Yeah, I think that's the concern, and I think you just want to make sure that we kind of have an even playing field, and it doesn't mean that there's none, by the way. I think there should probably be the same level of oversight of both frontier models as well as open weights models, and I think we should have a consistent framework, but kind of making sure that that folks realize how important that is to what customers and our industry is out there building on, and that those open weights are a key building block of that. And we want to make sure that however legislation lands, it lands evenly across all of those.
Matt, a question from our Bloomberg Tech audience for you is AWS's attitude towards Kimi K3. The open weight was released July 27th. Given the platforms AWS offers, what is the plan there?
Yeah, it's a great model. The team there has done a really nice job, and we see really great performance there. And we'll continue to support in Bedrock offering the Kimi models. I think the interesting thing is also, as you see many of these open weight companies, they're starting to think about how they make money in these models as well. And so they're starting to introduce licensing around some of these open weights models as when customers want to run them in a cloud environment. And so I anticipate that there's going to be a blending of some of these models too, where these companies won't continue to spend lots of money and then just offer their IP up to the world. They're going to be licensing models. They're going to have ways of making money on those as well. And you're starting to see that with some of the open weights models actually having some licensing around them. And so we'll keep supporting these in Bedrock and working with those companies in order to offer these in the best possible way.
That's where I'd like to end the conversation. The business case and economic opportunity for open models from AWS's perspective. So if the model makers themselves would like to make money, how does AWS see that going in your favor to make money from wide use of open models? Yeah.
Yeah, I mean, we basically, that is exactly what AWS, it's a great platform for companies to come and offer their IP and their capabilities to the world. And so everybody, whether they're startups, whether they're governments, whether they're large enterprises, everybody can build on top of AWS. And if they have choice and they have access to these different models, it allows companies to be able to come and monetize them and sell when they have value to customers, to be able to offer value when they think that they can go at lower prices or better performance. And so having that open platform allows everybody to have that competitive chance. And AWS is a fantastic partner for all of these model providers to get access to the broad set of customers. And so it's a great ecosystem where model providers benefit and customers benefit by having all these in the same place.
Matt Garman, CEO of AWS, Amazon Web Services, back on Bloomberg Tech. Thank you very much.
All right, that was Bloomberg Tech's anchor Ed Ludlow speaking with Matt Garman, the CEO of AWS, on that extraordinarily fast-growing business and the capital required to have it grow. Right now, let's get a little bit of a reset in the marketplace. We can do that. Charlie Pellet, any Bloomberg Business Flash?
Thank you very much, Paul. Right now, we do have Amazon shares up 5.2%. Amazon, by the way, hitting a $3 trillion valuation after last week's blowout earnings report. The Dow, the S&P, NASDAQ all advancing. Techs are surging. We begin with the NASDAQ Composite Index up 1.9% right now. NASDAQ 100 up 1.4%. S&P just about the best level of the day, up by 1.2%. Dow Industrials up 1%. All of this with the Bloomberg Mag 7 Index advancing by 3.8%. The SOX now lower by 0.1%. The VIX below 16. A 2-year yielding 4.24%. The 10-year 4.67%. The 30-year right now at 5.21%. Spot gold down 0.2%. 4,037 the ounce, providing a lot of the optimism today for U.S. markets. The sell-off in West Texas, intermediate crude, WTI, 79.75 a barrel, down now by 5.8%. Barrel of Brent, 84.02, down by 4.4%. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. On Friday, New York State sued Kalshi for running, allegedly, an illegal, unlicensed gambling operation in the state.
Right.
They're basically saying that Kalshi's prediction market exposes New York State residents to serious personal and financial risk, and that the company did not seek a license from the New York State Gaming Commission. That gets to the heart of the matter here with prediction markets and whether they're gambling or something else. And so the discussion continues, the debate continues. Jonathan Kay is founder and CEO of Apptopia. He joins us right now from Boston. Jonathan, different states have different points of view on this. We know the federal government looks at prediction markets and says it's okay. Just give us the lay of the land right now in terms of how much market share prediction markets have taken when it comes to sports betting, or in this case, the terminology they use is events contracts.
Yeah, well, Paul and Scarlett, thank you so much for having me. Nice to be here today. Generally, what we're seeing is, I think we're here today because we've seen prediction markets, daily active users, right? The amount of people that go back to the app each day actually start to meaningfully surpass those of online sports books, often known as DraftKings and FanDuel. And what you've seen is actually since the Super Bowl, the last kind of 4 or 5 months.
I'm going to go to Fox Business. They were interviewing the Chevron CEO. Before we do, please go to my store, the-studio-reykjavik.com. Get the Boomer Boost. This has the 68 nutrients that you need to slow down the aging process and get healthy. It'll help to improve your brain function, musculature, rev up your metabolism. You'll have a steady burn of energy throughout the whole day with no spiking. It'll help with your immune system, your endocrine system, and your cardiovascular system. This has the multivitamins and the minerals that you need on a daily basis, but you get a lot more to help to slow down the aging process and to get healthy. You should be taking this every day. This is a month's supply. I also have C60 that you can stack with Boomer Boost or take separately. It's a very strong antioxidant. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper per ounce to get the higher ounce configuration, so you can save some money. Now, C60 will soak up free radicals, help to improve the health of your mitochondria. Your energy will improve. The cells will have less stress, less inflammation. Your organ systems will perform better. It'll also help with the basal layer of your skin, so it'll improve skin health. This stacks really well also with resveratrol for the skin health. And C60 helps the cardiovascular system and brain function. By soaking up those free radicals, you're reducing the concentration of oxidized LDL, so you're reducing plaque formation. For your neurons will be healthier. The mitochondria in the neuron will be healthier. By soaking up those free radicals, you'll have more ATP, more neurotransmitters, and better positive neuroplasticity. So you're thinking faster and have better memory. To slow down the aging process, take a teaspoon a day every day. Again, you can get this in MCT coconut oil, extra virgin olive oil, and avocado oil. C60 needs to be in oil. Take a teaspoon a day, preferably on an empty stomach. You'll also notice that you're recovering quicker after a workout. Soaking up free radicals is super important. is slowing down the aging process. And like I said, you can stack it. This is a very powerful stack right here, the Boomer Boost with the C60. And C60 with resveratrol will help with the skin health. So please go to my store, the-studio-reykjavik.com. Use discount 5, you get $5 off any order.
All-out quarter for Chevron with record earnings, record U.S. production, faster than expected integration with Hess, and a new deal with Microsoft to power up a data center in Texas. Joining me now is the chairman and CEO of Chevron, Mike Wirth. Mike, great to have you. Thank you so much for joining us.
You're welcome, Maria. It's good to be with you.
Well, it was an incredible quarter. Net earnings of $12.1 billion. That was more than $6 a share. The company's highest quarterly profit in at least 6 years on revenue of $70.1 billion, up 56% from a year ago. Can you give us the main takeaways of the quarter and what we should understand best about what took place in the last 3 months?
The story of the quarter is one of consistent execution, strong production, and record U.S. refinery throughput. We had assets around the world that ran at or near full capacity. We set a production record in the U.S. at nearly 2.1 million barrels of oil equivalent per day. We had record refinery throughput with runs greater than 1 million barrels a day, an all-time high here in the U.S., and several refineries set all-time records. All of that critically important at a time when the world energy system has been stressed and the need for supplies to markets and customers has never been higher. I'm really proud of our people in the quarter they delivered.
Yeah, congratulations. And you've been investing in this period. You know, one of the highlights, obviously, was much higher oil prices. And Mike, that's because of this war in Iran. And I want to get your take on that, because the last time we spoke, there was serious worries about security, about ships transporting through the Strait of Hormuz. What can you tell us as this war has escalated once again?
Well, I'll start with your comment about growth. Our production was up 20% year on year, 5% just since the first quarter to the second quarter. So we have been investing to grow production and bring energy to the market. The issues associated with the conflict in the Strait continue, and there are new developments each and every day. We now see not only the Strait of Hormuz, but the Red Sea and the Black Sea have risks and uncertainties. So some of the challenges have expanded, and the risks to supply are very real. We've seen demand in the world remain pretty strong, and China is perhaps the unexpected part of the story in that they've been able to reduce their crude purchases, which has taken a little bit of the pressure off the demand side of the equation as supply has had these challenges and these risks. And so inventories have been drawn down around the world, whether it's strategic stocks or commercial stocks, and the situation remains somewhat fragile and uncertain.
Well, has the Iran conflict permanently changed how you view geopolitical risk and energy security at this point, Mike? I mean, we're worried about ships transporting and actually a shutdown in shipping for these refined products.
Our thinking on.
We live in a world of systems, cities, subways, forests, even our phones. Our organizations are systems too, but
Our thinking on this is evolving. We've seen things like that happen over the past. I've been in this industry for 44 years. We've seen conflicts in the Middle East. We've seen conflicts in other parts of the world that have created issues for our industry. The industry responds in the short term with rerouting of supplies, and I think the industry's done well in this. The United States has been a big part of the story because as the biggest producer in the world, the biggest exporter now, to meet needs of our allies around the world, the U.S. has stepped up to be part of the answer here. Longer term, I think you will see some changes in the system. We are in discussions with Iraq about potentially
entering one or two oil fields there. And part of those discussions would include a framework that would allow the construction of a pipeline that would go north and then move to the Mediterranean Sea and create a pathway for that production to get to market that would not have to go through the route today, which is through the Strait of Hormuz. And so I think you will see changes in the energy system. It's a little early to say what all of them are as we deal with what's still an evolving set of circumstances.
Well, thank you for that, because I know now you've got the Houthis involved. They've been attacking assets near the Red Sea. You've got Egypt. So, Mike, what can you tell us about infrastructure that has been hit as a result of this war? Is there any reason to believe that it's going to take longer and longer to get that infrastructure back in place?
Well, it depends on the particular circumstances. In some cases, the hits are relatively easily fixed if it's piping or tanks. In other instances, if it's more sophisticated processing equipment, that takes more sophisticated and specialized manufacturing to replace that equipment, and the lead times on replacing that can be months or even years in some cases. And so I think the unfortunate thing is that energy assets have been targeted in this conflict, and what that means is it degrades the capacity of the energy system to meet global demand, and how quickly that comes back will be one of the things that determines when markets actually get back to some sort of a new equilibrium.
But Mike, you've said that given this disruption, you would expect oil prices to remain elevated for some time, right?
We've seen supply constrained, we've seen damage to infrastructure, and we have new risks that I think will be priced into the market on shipping, for instance. So shipping rates, shipping insurance, and the willingness of ship owners to go to certain ports in the world is likely to remain a question for some time to come. As I mentioned earlier, the inventories around the world have been drawn down. So some of the buffers that have bought us time and allowed markets not to increase the way some feared that they might, those buffers are greatly diminished, and the risks continue to present themselves. And so I think what that creates is a situation where the price pressure is more to the upside than it is to the downside. And so I do believe that we're going to see circumstances keep that pressure in place here for a time to come.
Mike, let me get back to the quarter, which was a blowout quarter, and your company's execution. It is also the 1-year anniversary since you closed the Hess transaction, and you said in the quarterly analyst meetings that you've achieved 50% more synergies with $1.5 billion in synergies. Tell me what this Hess acquisition has done, given the importance of the Guyana facilities and opportunity that you are in right now.
The headline on Hess is what looked like a good transaction at the time we did it, looks even better today. The integration has strengthened our portfolio. We accelerated financial delivery with 50% more synergies 6 months earlier than we expected, so $1.5 billion rather than $1 billion, and mid-year 2026 rather than end of year 2026. We're seeing strong free cash flow, roughly double what the incremental dividend cost is. So we use shares to transact for the company. The dividend that we're paying on that share is those shares is only half of what the free cash flow generation has been. So the transaction is accretive on a per share basis on free cash flow. We get a bigger, stronger portfolio. It enhances and extends our growth into the 2030s. And perhaps most importantly, we've added a tremendous talent to our workforce. The people that have joined us from Hess are already making a significant contribution. They've strengthened our workforce, and this is a tremendous combination.
That is wonderful, Mike. What can you tell us about the future and how sustainable these very strong numbers are? What are you expecting second half of the year? Also about production. Analysts want to know if you're going to be able to keep up this very strong production second half of the year.
We've guided to 7 to 10% production growth for the full year of 2026. That guidance remains intact. We are seeing strong underlying performance in businesses around the world and have every reason to believe that we will deliver that. That's on top of growth last year and the year before. So we feel very good about that. And the reason is the quarter was not a function of some unique set of circumstances in the quarter. We've been building a stronger portfolio for the last decade. A decade ago, a little bit more than that, our production in the Permian Basin was 100,000 barrels a day. Today, our production in the Permian is greater than 1 million barrels a day. A few years ago in the Gulf of America, it was less than 200,000 barrels a day. Today, it's well over 300,000 barrels a day. We've added a couple 100,000 barrels a day in the Bakken, 400,000 barrels a day in Colorado and the DJ Basin. So we've steadily built a portfolio, particularly in the United States of America, that is much stronger than it was today, that's producing at a much higher level, and will continue to do so long into the future. We've guided to a 10% annual free cash flow growth over the years 2026 through 2030. So through the end of the decade, we've got underlying business improvement activities and production growth that will deliver value for shareholders and, most importantly, more energy for markets and consumers.
Yeah, I'm glad you mentioned the Permian because I was with you at the Permian Basin and I saw Chevron's operations there in Texas, and it was incredibly impressive to see that you are continuing to tap into what has been incredibly rich content in the Permian Basin.
The Permian story just keeps getting better every year.
Whoa, what's that? I just built a budgeting app in Base 44. Guys, Nina just built an app. Impossible.
Story just keeps getting better every year. This year, we expect to take the capital investments per barrel of oil and gas produced down by 25% from last year. And again, this comes on top of several years of performance improvements. So the story in the Permian Basin is strong and getting stronger.
You know, another part of this story that I just loved looking at with regard to the Chevron overall outlook is what you're doing with AI. Because this quarter, with your announcement of an agreement with Microsoft, tells us that Chevron is not just selling oil and gas. You're actually building AI infrastructure. Tell us about this 20-year deal that you're announcing with Microsoft.
I'm really excited about the deal that we've announced with Microsoft. We're helping power AI growth by delivering abundant, affordable, and reliable energy needed to scale AI. This is a 20-year power purchase agreement with Microsoft, one of the strongest companies in the world, for 2.7 gigawatts of capacity in West Texas. This is a behind-the-meter project. So what that means is we're not moving power through the grid and adding to the strains on the grid that are raising costs for ratepayers and creating reliability concerns. This is power that will be built off the grid, will be there to supply the Microsoft data center complex, and ultimately at full capacity, we'll have the ability to provide power into the grid to help alleviate concerns for ratepayers. It takes advantage of the abundant Permian gas resource we were just talking about, and it's really differentiated from other announcements you see in the quality of the players involved in this, the scale. It's the largest, most advanced project of its kind, and it leverages Chevron's unique strengths. Our project execution capabilities, our strong balance sheet, our strong gas position, our long-standing relationships with people like GE, Vernova, and Microsoft. And importantly, we've already identified additional locations where we could do this again, and we're in conversations with potential customers about similar projects elsewhere.
Wow, that's incredible. So does a 20-year deal on AI infrastructure mean that Chevron's earnings are less dependent on the price of oil from day to day?
It's a very important attribute of this. This will be a steady stream of payments for the capacity that are uncorrelated to oil and gas prices. We're in a volatile industry. Right now, we're seeing very strong prices. 6 years ago, we saw negative prices. And prices in this industry cycle, they go up and they go down, and our cash flows reflect this. This is a project that will create a very steady stream of cash flows that will offset some of that volatility, that will
hedge away some of that risk for our shareholders, and it's an interesting new model that we think has the potential to become a bigger part of our business.
Well, it's incredible. Over the last week, I've been interviewing lots of officials and executives on AI, and leaders from OpenAI and Anthropic have all told me that the bottleneck for AI is no longer chips, it's power. And that puts a company like Chevron in the catbird seat as we see this revolution underway. So is this going to be as important as perhaps any oil discovery that you could make over the years? Could this be that important?
Well, I think it's important. Our core business remains oil and gas, and the world consumes over 100 million barrels of oil every single day. And so we want to be sure that we keep our eye on what sits at our core. But this is an important new opportunity. If you think about AI, you really have the input is energy, and the output is intelligence. And in between, we've got data centers, we've got chips, we've got models. But the constraint on the system today is the power. We're helping to solve that constraint. The other thing that's interesting is you look at this and you look at past booms in telecommunications, in rail, in other infrastructure build-outs in the country. The technology in the middle sometimes cycles. There are early leaders, there are later companies that succeed, but the infrastructure is built and it's enduring, and it's where there's a lot of important value created. In this case, we're building 20 and 30-year assets that will endure through whatever happens with chips, which have a shorter life, continue to evolve with the companies, which likely will have their own competitive dynamic that unfolds over this time. But a constant will be the need for that power, and that's the part of the chain that we're investing in.
Well, that's right. And that's what I'm wondering if the Wall Street community understands that in terms of the sustainability, the strength, and the power of this deal. And you just suggested you're going to have more deals. Are more deals in the works with the hyperscalers to power up data centers? Mike, and do you think investors are valuing this properly given the potential for growth?
There are conversations underway. We've identified a number of additional locations. We've actually secured some of those locations and have begun early works on those. We're in conversations with a number of different large customers, the largest companies in the world. And I expect that you will see more deals. I think investors are just beginning to understand what that might mean for our company. I think they are interested to learn more about this and to see what other deals we can put together. But I think they're just now beginning to understand what it could mean.
Yeah, it's very powerful. Mike, did I miss anything that you'd like to add in terms of where Chevron sits today after this very strong quarter you've reported?
I think the one thing that I would mention is we've seen the administration take some actions that have been very helpful to markets. The Strategic Petroleum Reserve release has helped create supply. The waiver of the Jones Act has allowed us to move crude oil and products around the United States to markets where it's needed. There have been some specification relaxations, which creates more supply. And so the policy actions that have been taken are the right ones. They're the ones that allow the market to work better and allow industry to move products to where they're needed. And I think there have been voices that have suggested other actions which have not been taken, some of which I think would not be helpful. And so we continue to work with governments around the world to meet the moment, and we're committed to doing everything we can to get energy supplies to a market that desperately needs them.
All right. Well, President Trump has been walking this balance to try to end this war in Iran and get oil prices lower before the midterm elections, while also encouraging Congress to codify some of those executive orders with regard to permitting. Mike, is there anything you think the administration or the Congress should be doing differently in terms of codifying those so that things don't change every 4 years with the new president?
I think the biggest thing that Congress could do is pass permitting reform. This has been talked about for a long time, and there's something in it for everyone. There's something, if you like wind and solar, permitting reform is helpful for more renewables development. If you believe the grid is a problem, permitting reform is necessary for us to modernize the grid. If you believe oil and gas and pipelines are also part of the solution, permitting reform is essential there because the current system has been weaponized to stop development of our industry. I think the administration has been a champion of unshackling free markets and allowing investments to flow into our economy. And we need to get a permitting system in place that enables that. And so I think that's the single biggest thing that could be done.
Understood. Congratulations on the great performance and execution, Mike, and thanks so much for being here.
Always good to be with you, Maria.
Good.
Please go to my store, the-studio-reykjavik.com. Get the structural nano silver toothpaste. This will whiten your teeth, freshen your breath, reduce inflammation at the gum line, help the health of the gum line, and neutralize. This is very important to use every day. It has no fluoride. It is the best toothpaste that you'll be able to get. So please go to my store, get a few tubes of this toothpaste, use it every day, especially during the cold season. I also have structural nano silver gels. You can get the tube version or the quick dispenser version called Renew. They're dual purpose. You can use it as a daily skincare. You can put it on a cut. It'll help to heal the cut quicker. You can put it on your hands and lightly coat your nostrils to reduce allergens and to neutralize during the cold season. Make sure you have some at home and at work. You never know when you need it. It's very effective. Please go to my store, the-studio-reykjavik.com. Get the structural nano silver gels. I also have Max 35 and Cleanse. Max 35 or Cleanse, you take a teaspoon a day every day, swish it in your mouth, gargle about 20 seconds, and then swallow it. What this will do is boost up your innate immune system. I've been doing this protocol for over 6 years. What this will do is help to neutralize, help to improve the health of your oral cavity and your oral pharynx, maintain your mucosal barrier, and help the health of your epithelial cells. It's really important. And when you have better oral hygiene, that also helps with cardiovascular health. Please go to my store, the-studio-reykjavik.com. Get the Max 35 or the Cleanse. Use it every day. Please go to my store, the-studio-reykjavik.com.
Been worse since World War II in a couple of different wars. But he talked to reporters about this at the back of the jet on the ride home yesterday on Air Force One. Listen.
If it was going to be attacked, it would have been by far the biggest attack since World War II. When the Allies asked to throw it off, you got to say, well, let's see. And the reason they asked is they think there's a deal. We're talking to them in the form of a negotiation. It begins tomorrow afternoon, and we'll see if it's true. I'd love to do that.
Well, we didn't get any further than 11:30 this morning. Yeah, just about a half hour ago on Truth Social, President Trump, Iranian leadership is unbelievably duplicitous, exclamation point. Who put that word in his head? They asked for a meeting, he says. Some would say beg. Talks begin with more scheduled in the immediate future. And they say opening and proudly, they're not having any discussions, that nothing is being talked about, and they're only dealing with Oman. That would be an accurate read on the news today, by the way. He goes on to write, then they go and give their usual blather in saying the Strait of Hormuz will be operated powerfully by them when it's already completely controlled by the U.S. Navy and our blockade. Or as some say, the United States wall of steel. Nothing gets through to Iran, he says, unless we want it to. Nothing will get through unless a deal or total surrender. I haven't heard those words in a minute. Whether Iran wants to admit it or not, we are, in fact, talking of a solution to a problem that they have caused for decades. It's very simple. Iran will never have a nuclear weapon. Thank you for your attention to this matter. Duplicitous is an adjective that means being deceitful, two-faced, or dishonest by hiding your true intentions behind false words or actions. In this case, unbelievably duplicitous. And that's where we start with Wendy Benjaminson. It's been a minute since we've had some time with Wendy. She's been toiling here all weekend while you were sunbathing and grilling, editing the copy that makes the terminal what it is. Our senior editor here in Washington. It's nice to see you.
Nice to see you.
You've been steeped in all of this all weekend, so you're primed and ready for us today on a Monday. Is he right? I mean, so he's getting one line from Iran. He's telling everyone about it on Truth, and then they turn around and tell us it's not real. So who's running this negotiation?
Very good question, Joe. I mean, we can sort of ruefully laugh about this, but the serious problem is the complete lack of transparency from the U.S. government. And then, yes, I find it completely believable that Iran is being duplicitous or running their own domestic politics game, just like Trump is, right? So, yesterday, as you saw in that clip, he said that Monday afternoon talks begin, and then this morning he says that they're not. But we didn't know when he said that the talks would begin Monday afternoon. We would love to ask him, with whom? At what level? What are the topics about? Is it Kushner and Witkoff talking to actual Iranian cabinet members? Is it Trump and a president? Is it, or are these, incredibly technical talks about uranium?
Right.
We don't know. Iran says they're not happening, and Iran says we do know. This is a fact. Iran and Oman are talking about administering the strait.
Yes.
But we have some reporting that part of the strait, they're creating a path to go through. They're planning on administering this, but that has nothing to do with the U.S. And part of the strait, we have reporting this morning that is mined, so that can't happen. Ships can't start taking that path anytime soon. And then you've got the blockade at the exit. So Trump's statements, he thinks may be straightening things out for the American people, but they're just not. They're just confusing things.
So going back to where we were before that post, this is Bloomberg's reporting from this morning. You probably edited the copy. President Trump said new Iran talks would begin Monday afternoon after he called off a planned attack on Iran, partially in response to pleas from allies in the Middle East, including Saudi Arabia. So there are no talks this afternoon? Or do we not know?
I don't know.
Okay.
I mean, Trump says there are. That is what he said last night.
The duplicities seem to make me think maybe no talks.
Yeah, the Iranians say there aren't, but it's very difficult to tell in this war who is right and who is speaking the truth. I mean, in every other war I've covered, which unfortunately is several, there are daily briefings at the Pentagon. There are daily briefings at the State Department.
Yes.
There are talks in a hotel where there is a pool of reporters outside, and someone will come out and explain to everyone what's going on to the extent that they can. But they'll give you a state of play. If you see everyone walk off in a huff, it's a pretty good sign that things aren't going well. If you see people hugging,
it's too volatile. What's going on with these negotiations? This is the reason why I created a hedge for the oil position. Buying and shorting oil futures. So right now, oil is trading at 79.70. It's just slightly above at the moment the 79.62 resistance level, and it's just hovering there, hovering. Big question. I suspect that on Tuesday, maybe Wednesday, we hear that the negotiations fail. Oil will spike. Please go to my store, the-studio-reykjavik.com. Get the collagen. This will help with your skin, your nails, your hair, your musculature, your bone density, and your joints. Use this every day. It's a month supply if you use a full scooper. You can mix it with soft foods, filtered water, a smoothie, milk. Some people even put it in coffee. Collagen. Collagen is a great way to help to remodel your joints if you have arthritis or a sports injury. Now, what you want to do is to do these exercises where you're opening up the joint up to the point of pain and slightly a little bit more and count to about 20 or 30 seconds. Do that 2 or 3 times. Do that every day, and you'll be able to open up the joint more. And what you're doing is you're creating a micro signal by doing this exercise. And take the collagen every day. And what the collagen does is that it helps to recruit the materials that you need to remodel the cartilage and to remodel the joint. Helps to block pain, gatekeeper NAV 1.7. It also helps to reduce joint erosion by blocking MMP3 and MMP13, and helps to reduce inflammation by blocking EP4. This is Very important to take, and I highly recommend if you're trying to remodel your joint, do these exercises, take the collagen and also take the collagen, because the collagen will give you the building blocks that you need to help remodel the joint. So please go to my store, the-studio-reykjavik.com. This is a very powerful stack to help with joint health. That's the end of my broadcast. Thank you for joining. I greatly appreciate if you share the links and ask your social media to follow me. There's censorship out there. I don't reach as large of an audience as I used to. That's okay. But the people that listen to me, you'll be able to make money in the market and you'll be able to get healthy. And if you spread the word, we'll be able to help more people. Thank you for listening and have a nice day.